Treasurer?
Treasurer.
Yes, sir. Yes, sir.
Treasurer Narayana? Okay.
So Prithvi Garu, Shashank Garu need to switch on his. Yes.
Shashankar is there with his formal attire. Na video రావట్లేదయ్యా. బలముది మండే.
నీది వీడియో రావట్లేదు.
వద్దున సరే అది చేయండి. ఇందాక దాని మీద సెట్టింగ్స్ వస్తున్నాయి.
So, with the permission of all of you, shall we start the session, sir?
Yes, sir. Yes, sir.
Yes, sir. Thank you. Good evening, all of you. I welcome you all to this virtual session on section 148A and section 148. The speakers of this session will be dealing with the provisions of these sections as well as recent case laws.
Okay.
Friends, we are joined by Advocate Dundu Manmohanji. He is a ex-ITAT member from Hyderabad. Also joined by Advocate Dundu Shashank from Hyderabad.
Hello, sir.
CAM Prithviraj, CAK Sivaram Kumar, who is the past chairman of Vijayawada branch, and also CAE Falgun Kumar, sir, who is the past SARC chairman. He was also ex officio of Vijayawada branch for 6 years. That is 2 terms. So, friends, we will start this Sir, M.R. Prasad Garu, I request you to please be on mute. So friends, we will start the session with Institute motto song. We need not stand, but as a mark of respect, you may place your right hand on your heart. Give me a second to play this song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदब्रह्मा तदब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः श्रितः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Right. Thank you. Now, may I know whether CAK Sivaram Kumar has joined? Sivaram Garu, if you have joined, you may please say hi to all of you. I'm afraid he is yet to join. But friends, what we'll do is we will straight away commence the seminar. Let me say a few words about Dr. CAE Falgun Kumar, who will be giving opening remarks for this session. He is aged about 68 years and he is a practicing chartered accountant. And he was the member or he is in practice since 1979 for the past 44 years. As a managing partner of CAE Falgun Kumar & Co., he is married to Srimati Vijayalakshmi, who is a doctorate in home science and worked as a principal of TTD College. They are blessed with 2 children, son and daughter. Both of them are qualified chartered accountants, practicing with father. Daughter-in-law is also a chartered accountant practicing in his firm. He is a classical flute player. His qualifications include MA, MCom, MBA, BL, DSA, PhD. He is also a member of the Institute of Company Secretaries of India. He is a qualified independent director of IICA of MCA of Government of India. He is member of AP State Regional Direct Taxes Advisory Committee for the years 23-24 and 24-25. He was appointed as member of Board of Studies of SV University and also SP Mahila University for the period 2012 to 14. He presented more than 450 technical papers in income tax in the past in various CPE seminars in all the 4 southern states CA branches. He was also the past chairman of SARC of ICAI. With these few words, I request CAE Falgun Kumar Garu to give his opening remarks on the topic.
Om Namo Venkatesaya.
That's right.
Esteemed past Vice President of Income Tax Appellate Tribunal, Sri Manmohan Garu, Advocate Shashank, Advocate Prithviraj, sorry, Chartered Accountant, come Advocate, I think. My own professional colleagues, Sri Ramakrishna Garu, Nata Ravi Kumar Garu, Vice Chairman of Vijayawada Branch, executive members of Vijayawada Branch, M.R. Prasad, and many of my friends. Good evening to all of you. In the society, the current heat topic is issuing 148A notices by the department, especially for 19, 20 and earlier assessment years. The department last month has issued thousands and thousands of notices. So as tax practitioners, how to face these notices? We have to thoroughly study, understand. For this, the Vijayawada branch has organized today and tomorrow, 2 days evening Zoom meetings. And for today meeting, Advocate Shashank and CA Prithviraj are going to give their experience. They are going to share their experience, the legal cases which recently have come in this, they are going to share. But I would like to introduce this subject to the participants, the job given to me. Though in others' case also, the Income Tax Act can issue a notice to a person in somebody's case as part of inquiry, either by summons or for inquiry 136 notice. This 148A mainly is issued, major portion is issued for non-filers of income tax. So who is a non-filer means who has to file the return. We have to go to 139.1. 139.1 says that whose income is exceeding the basic threshold. So the basic limit, once it exceeds, the 139.1 says you have to file the return. Basic limit exceeding the threshold means the basic limit was 2.5 lakhs only. Earlier, even 2 lakhs was there. So the basic limit, when it exceeds, you have not filed the return, because the 2.5 to 5 till last year, and for the current running year, it may be 3 to 7. The rebate is there, doesn't matter. Once the basic limit is exceeding, whether liability is there or not, filing the return, if it is not there, with that PAN number, automatically the return comes. Then, what are the consequences? What are the consequences? The 2 types of, say, assessees we can find. Those whose income is exempt already. In that sense, they would not have filed the returns, thinking that their income is exempt. For example, a school below 1 crore earlier, now in the recent 2 years, it has been enhanced to 5 crores. So they have to file the return, but their income is totally exempt under 1023(3)(38). So people who are under the impression that their income is exempt, there is no tax liability, take relaxation voluntarily by not filing the return. They are inviting such notices And after receiving such notices, to prove that you are eligible for exemption is very, very difficult. If you voluntarily file, proving is easy, but after receiving 148A notice, proving that your income is exempt is very, very difficult. In fact, in one case, for a government promoted university, just because they have not filed the returns, reopening earlier years, income computed under undisclosed sources, credits and income, 300, more than 300 crores demand is raised. Sir, Manmohan sir has come to my rescue, finally filing a case in the High Court and getting the stay. So your income may be exempt. You may be an institution, you may be a temple. Normally these temples, people, they never listen and they try to, we are managed by state government endowments department. So they don't listen that you have to file the return. The income is that of the god, that of the temple. So it is not the income of the government, because you are a government servant managing. You don't think that you are exempted. So like this, these 148A notices may come on different contexts. Now with the highly computerized income tax data bank, minimum 50 types of financial transactions are being filtered in the AAS. So they have released AAS app also. One can see how many transactions he has entered into the government is capturing. In the income tax portal department is having a 360 degrees insight name. So the income tax department is pursuing all this. That means to catch a big fish, they are throwing a net in the sea. So they are filtering the data, information and issuing these 148 notices. But whether ultimately tax liability will be there or not, it is very difficult to comply these provisions. While answering, the representative, the tax practitioner must have a 100% thorough knowledge of the facts and also a fairly good, reasonable knowledge of the law. Why I say, when transactions are there, transaction is not equal to 100% income, as we all know. The transaction may end up with part of the income. 12 to 15 years back, in Ballari mining cases, 100 crores to 500 crores turnover people who have not filed the return ultimately got assessments completed by declaring 2%, 3% income with a minimum penalty of 25,000 rupees per annum for not maintaining the books of accounts. Assessments are completed under scrutiny, hundreds of crores turnover. So this legal side also a practitioner should know, rather than a chartered accountant is simply 50 crores turnover. Come on, let us prepare the books, now get them audited. That Herculean task may not be necessary in some cases, though not in all cases. So case to case, there may be several reasons for issuing 148 notice. Maybe 26 AS mismatch may be one reason. SB account more than 10 lakhs rupees cash credits maybe. So the 139(1) mandate has in the recent past amended, even paying per annum more than 1 lakh rupees electricity charges. If a person is having 5 apartments, lets out, that income may not be under house property liable for tax, but because all the service connections will be in his name, 139(1) says, if electricity bills per annum more than 1 lakh rupees are paid by one person, he is liable to file the income tax return voluntarily. Based on that also a notice may come. So like that, several degrees, several angles are there for issuing the notice. So for replying this notice, facts of the case are to be studied, in whose case the notice is given. There may be a partnership which has been dissolved. There may be a wine shop which was wound up. Now from 1419, there are no private wine shops in Andhra Pradesh. Maybe for earlier cash deposits more than rupees 10 lakhs in one SB account, a 148 notice may come now. So the facts of the case studying is one part. Applying the judicial decisions where AP IT80, Hyderabad IT80 itself, when sir was also there, for all wine shop, though books of accounts are not there, 2 to 3% is sufficient. If he agrees that income, pay the tax and get away. So Hyderabad bench, number of cases has given the. So this legal position knowing is also equally important, rather than simply after receiving the notice, come on, prepare the books of accounts, now audit, now prove all your, which is impossible, and sometimes you will end up wrongly in a very heavy liability rather than giving relief to the assessee. So these both the sides. So చట్టం యొక్క పరిధులను తెలుసుకోవడం మాత్రమే కాకుండా వాస్తవాలని, ఫ్యాక్ట్స్ ని ఆకళింపు చేసుకున్న తర్వాతే ఈ నోటీసులకు రిప్లై ఇవ్వాలని, హ్యాపజార్డ్గా ముందు ఏదో ఒక రిప్లై ఇవ్వడం, మళ్ళీ పెద్ద లైబిలిటీ వచ్చిన తర్వాత మళ్ళీ ఒక పెద్ద అడ్వకేట్ గారిని పట్టుకొని హైకోర్టుకి వెళదాం, అప్పుడు మళ్ళీ స్టే చేద్దాం, అప్పుడు అనడం అనేటువంటిది కుదరకపోవచ్చు. కాబట్టి మిత్రులందరికీ నేను ఇచ్చేటువంటి సలహా ఏంటంటే, మొట్టమొదటనే వీలైనంత 2.5 lakhs కన్నా 3 lakhs కన్నా మించి ట్రాన్సాక్షన్ చేసిన వాళ్ళందరికీ రిటర్న్ వేయడం అనేటువంటిది కనుక ఉన్నట్టయితే, వేసిన రిటర్న్స్ లో 98% వాళ్ళు స్క్రూటినీకి తీసుకోవడం లేదు. 2% మించి రిటర్న్ చేసిన వాటిలో స్క్రూటినీకి రావడమే లేదు యావరేజ్. కాబట్టి రిటర్న్ వేయకపోవడం అనేటువంటిదే పెద్ద ప్రమాదం అని, దానివల్లనే ఈ 148 నోటీసులు ఎక్కువగా వస్తున్నాయని. కాబట్టి 148 నోటీసు వచ్చినంత మాత్రాన భయభ్రాంతులు కాకుండా, ఆ ఫ్యాక్స్ అది బిజినెస్ ఇన్కమా, ఎగ్జామ్టెడ్ ఇన్కమా, ట్రేడ్ యూనియన్ డిపాజిట్ చేసినట్టు దానికి కూడా కార్మికులు ట్రేడ్ యూనియన్ వాళ్ళకి ఇన్కమ్ సెక్షన్ 10 లో ఎగ్జామ్షన్ ఉండొచ్చు, ఆ ట్రేడ్ యూనియన్ నోటీస్ ఇస్తారు. ఒక అపార్ట్మెంట్ రెసిడెన్స్ అసోసియేషన్ వాళ్ళు మంత్లీ వసూలు చేసుకుంటే క్యాష్ ఉండొచ్చు, దానికి ప్రిన్సిపల్ ఆఫ్ మ్యూచువాలిటీ ఉండొచ్చు, వాళ్ళకి నోటీస్ ఇస్తారు. కాబట్టి అనేక రకాల వ్యక్తులు, అనేక రకాల ఆదాయాలు ఉంటాయి. ఏజెన్సీలు ఉంటారు కొందరు, ముఖ్యంగా గ్రామీణ ఉత్పత్తులకి, అది పత్తి కావచ్చు, కాటన్, లేదు మామిడి పండ్లు సీజన్ ఇప్పుడు పండ్లు కావచ్చు, ఇంకొకరి తరఫున కొని అమ్మేటువంటి మధ్యవర్తులు, ప్యాడీకి కావచ్చు, దళారులు ఉంటారు, వాళ్ళ బ్యాంక్ అకౌంట్లో డబ్బు పడవచ్చు, వెళ్ళిపోతూ ఉండొచ్చు. కాబట్టి క్యాష్ డిపాజిట్ అయినంత మాత్రాన, లేక క్యాష్ కాకుండా ఇతర ట్రాన్సాక్షన్ జరిగినంత మాత్రాన అల్టిమేట్లీ ఇన్కమ్ అనేటువంటిది అనేక రకాలుగా ఉంటుంది. కొందరు ఎక్కువగా మనీ లెండింగ్ చేస్తుంటారు, చిట్స్ బిజినెస్ చేస్తూ ఉంటారు, అన్రిజిస్టర్డ్ చిట్స్ ఇస్ ప్రొహిబిటెడ్ బై లా, బట్ ఈవెన్ దెన్ ప్రాక్టికల్లీ దే మే డూ. For Income Tax Act, whether it is a permitted business or a legally permitted business or not legally permitted business is immaterial. The income has to be computed. So, మనం ఇన్ని రకాలుగా 148 నోటీసులు వస్తాయి కనుక, అన్ని రకాల 148 నోటీసులకి రకరకాల కేసుల్లో వచ్చినటువంటి కోర్టు నిర్ణయాలని మనకు మిత్రులు షేర్ చేస్తారు. ఈ మొదటి 1 to 1.5 hours మిత్రులు షేర్ చేసేటువంటి ఆ లీగల్ సమాచారాన్ని ఫ్యాక్ట్స్ తో మనం పెట్టుకొని ఉన్నట్టయితే, చివరి 1 గంట మన ఆర్గనైజర్స్ కోరినట్లుగా సార్ మన్మోహన్ గారు, నేను కూడా ఉండి, మనం ఈ పార్టిసిపెంట్స్ యొక్క డౌట్స్ ఏమన్నా ఉంటే మాకున్నటువంటి కొద్ది పరిజ్ఞానము, అనుభవంతో ఎంతవరకు అయితే సులువుగా వాటిని మనం ఏ విధంగా పరిష్కరించే, అనేక పరిష్కార మార్గాలు ఉన్నా, ఆల్టర్నేట్ రెమెడీస్ ఉన్నా, ఏది బెస్ట్ మార్గం అనే దాని గురించి మనం చర్చించుకుందాం. ఈ అవకాశం ఇచ్చినందుకు విజయవాడ బ్రాంచ్ వారికి ఐ ఎక్స్ప్రెస్ మై గ్రాటిట్యూడ్స్. థ్యాంక్ యూ సో మచ్.
Right. Thank you very much, sir. Falgun sir, a apt opening remark from you, as always. You are a very seasoned speaker. Sir Manmohan sir, first our advocate Shashank and Prithviraj, CA Prithviraj will be speaking, sir, as Falgun sir has already mentioned now. And your expertise, we will be utilizing in the last 1 to 1.5 hours. We request to stay and bear with us for this 1.5 hours, so that our participants will get benefited out of your vast experience of what you say, representing for more than 5,000 cases across the tribunals and various courts. So friends, now may I request the treasurer of Vijayawada branch, CA Jayant Uppuluri, to please say a few words about Advocate Shashank Dundu.
Yeah, thank you, sir. Thank you for this opportunity. Shashank Dundu, sir, he's completed LLB in 2015 from Siddhartha College, Law College of Mumbai. And initially, he has enrolled with Bar Council of Maharashtra and Goa on 5th February 2016. And he joined the chambers of K. Sivaram, Senior Advocate, Mumbai. Under his guidance, he has opportunity to appear before Honorable ITAT, CESTAT and Honorable High Court of Bombay, in various interesting cases between 2016 and 20. And to highlight over, he also represented Mr. Shah Rukh Khan case as well in Mumbai. In February 20, he has shifted to Hyderabad and enrolled with the Bar Council of Telangana, joined the chamber of Sri Manmohan Sir, Advocate High Court of Mumbai, High Court of Hyderabad and Amravati. During a long tenure as an advocate, he has invited by various chapters of ICAI tax bar associations to deliver lectures on subjects connected to direct tax laws and other allied laws, presented papers in various seminars and also co-authored articles which were printed and been a part of editorial and research team in All India Federation of Tax Practitioners Committee. And from 2016 to till date, he dealt with VAT, GST, income tax, service tax and other matters and appeared before various forms, particularly before Income Tax Appellate Tribunal and High Court and under the name and style of DMM Associates Legal. By this, I will give this opportunity to you, sir. Please enlighten your knowledge to our participants. Thank you, Kishore, sir.
Thank you so much, Jan Garu. Thank you to everyone. Andarki namaskaram. Good evening to one and all. I would like to deeply thank the Vijayawada branch of ICAI for giving me this great opportunity to speak on one of the most trending and discussed topic, as rightly pointed out by Falgun Kumar sir also. That is the provisions of section 148 and 148A. In fact, I've been reading the chats also. A lot of people have requested that it should be in English so that they also understand. So I'll make sure that I stick to that language for the benefit of all. So how do I share the screen? I would like to share the screen. The PowerPoint.
Sir, you can share your screen. But I
Yes.
may also request Prithvi sir, if you have logged in another place, you please log out because you are joining Shashank sir, so that we may get a clarity of voice.
There is some problem in his laptop. That is why he's joining me here.
Yes,
So-
both of you can join from the same place, but the thing is, we should disconnect the other one.
Yeah. One last question, sir. How do I make this full screen?
You can click on that. Yes, you are at the right place. Go for PPT presentation. Not that one. This cup like symbol is here.
This
That
one, sir?
Yes, please click that. Slideshow.
Yes.
Yes.
That's right.
Yes. The most interesting topic, I would say. In fact, if we first want to see as to what is the objective of carrying out reopening under section 147, it mentions to bring any, firstly, it is to reopen a assessment that is either a closed one or a completed one, and to bring any income which has escaped assessment. Now here, one question may arise is, what is escaped assessment? Should there be a prior assessment? Because under section 2(9), assessment includes reassessment. Again, Rajesh Javeri in the case of 291 ITR, the Supreme Court has mentioned that 143(1), that is a summary assessment, cannot be considered as an assessment. So even those questions might come up eventually. And of course, it is well accepted that the provisions of section 147 are not for the benefit of the SSC. It is, of course, for the benefit of the revenue. And definitely, it cannot be in the form of a review proceedings. Now, the government has introduced the new scheme of reassessment by Finance Act 2021. And everyone is well aware of it because we have been getting notices from the department left, right, and center. And they have now introduced new provisions, either amending a few or introducing completely new provisions. That is with effect from 1st April 2021. Now, what is the intention of the legislature? For that, we have to definitely visit the memorandum explaining the Finance Act. And the short portion wherein they mentioned was to remove the difficulties and ambiguities which were existing in the already in the erstwhile provisions. And of course, to reduce disputes and litigation. That has always been the case. Even in case of 158 AD, I will deal with that later. But whenever they have found issues or difficulties and increased litigation, they have tried to either amend it or introduce new provisions. So, and of course, for ease of doing business, this is something they have added in the para as well. So before moving on to what is the new reassessment scheme, let us understand what were the provisions of the old reassessment scheme. I will not take much time in this because I am sure everyone mostly knows the provisions as well as the legal as laws laid down and interpreted by the courts from time to time. Now, this is the erstwhile provision that is prior to 1/4/2021. One of the most important lines which everyone always focused on, in the courts also focused on, was the assessing officer should have a reason to believe that any income chargeable to tax has escaped assessment, and the rest of it follows. And let me also point out that this reason to believe an income chargeable to tax being escaped from assessment is still relevant till today. Even the new provisions contain a major chunk of what has already been dealt with in the earlier provisions. Now, for the purpose of making reassessment under Section 147, a notice under Section 148 of the Act should be issued after recording proper reasons with regard to escapement of income. So this is the first thing, that is, before issuing the notice itself, they have to record proper reasons and also provide it. Now, provision of it, of course, depends upon us asking for the reasons. Now, the concept of reason to believe generally was understood to be a bona fide belief by any person, prudent person, which has a live link or connection with tangible information, on the basis of which such belief is formed. For the purposes of the belief also to be formed, we should genuinely believe, and it should not be a blind belief. It should have a live nexus or connection with the information that is available with the assessing officer. And in various case laws, they have upheld this aspect. In fact, the Supreme Court in Lakmani Naval Das 103 ITR, it mentions about a rational connection. It says that rational connection postulates, I'm reading it as they have mentioned in the case, of course. Rational connection postulates that there must be a direct nexus or live link between the material coming to the notice of the income tax officer and the formation of his belief that there has been escapement of income. So live nexus, and again, once again, yes, sir. Is anyone speaking?
Sir, you please unmute and speak, sir. Shashank, sir. Yes.
Am I audible, sir?
Now you are audible, sir. I have muted all.
Okay. Yes. So, as per the Supreme Court decision, it was in 1976 that this proposition was propounded, and it still holds good, because then it mentioned about a connection, a direct nexus, a live link, and there has to be some material with the assessing officer, and that link has to be between coming to the reason to believe and the material. And even till date, it holds good, because such aspects, the trappings of which are even found in the latest provisions. And the same, in fact, the Supreme Court also mentions that the fact that the words definite information, in fact, in 1948, the words definite information were present, which were then removed. Supreme Court mentioned that removal of such terms, such words, that definition information, would not lead to the conclusion that action can now be taken for reopening. The fact that the words definite information, which were there in Section 34 of the erstwhile Act 1922, at one time before its amendment in 1948, are not there in Section 147 of 1961, would not lead to the conclusion that action can now be taken for reopening assessment, even if the information is wholly vague, indefinite, far-fetched, and remote. These particular words need to be kept in mind, because back then also, whenever there is a reason to believe, there is information that needs to be very specific and it has to have a live link. So these aspects still hold true till now, still hold good. Now, few points for the purpose of reason to believe that we must keep in mind is the reasons must be dated. And all these points are based on several case laws, several judgments which have time and again upheld these aspects. So reasons must be dated, approval of the authorities has to be taken, reasons must be recorded in writing, and the same have to also be provided to the SSC in case the SSC asks for them. It must be written that I have reasons to believe. They cannot mention that, I have suspicion or I believe. These particular terms have to be mentioned, and reasons must be of a jurisdictional assessing officer, and it must be based on evidence. These are the few points that go before a reason to believe comes into existence of a assessing officer. Now, before issuing a notice under section 148, an assessing officer had to, I'm using the word had because I'm still dealing with the erstwhile provisions. Before issuing notice under section 148, a few aspects needed to be in the mind of the assessing officer. That is, first one is recording of reasons to believe. Section 148(2) mandated that the assessing officer to record reasons to believe, demonstrating that income has escaped assessment. And all this prior to issue of notice under section 148. And first thing, he has to record reasons. Next, he has to check whether he or she has to check whether it is beyond 4 years or beyond 6 years. And accordingly, he has to proceed, he or she has to proceed that a notice can be issued or not. A valid sanction needs to be taken as per section 151, and the time limit also, that is 4 years, 6 years, based on the amounts, that is 1 lakh in case of more than 4 years. And 16 years in the case of availability of foreign assets, and now it is not, it is no more there. These specific, with respect to foreign assets, it's not available. After the aforementioned 4 steps, what are the 4 steps? That is the recording of reasons beyond 4 years, sanction and time limit. After these have been checked by the assessing officer, they will then proceed to actually issue a notice to the SSC. This is the first step wherein he takes to initiate the proceedings, the reopening proceedings. Now, for this, issuance of notice under section 148, after complying with the statutory requirements, as we have just mentioned about, AO was required to issue jurisdictional notice intimating SSC about initiation of reassessment proceedings and directing to file the return of income. After this, the SSC will have to file the return of income and seek the reasons also. In a lot of cases, the SSC only used to file the return and leave it. But for this, in fact, the Delhi High Court in the case of sub-infrastructure had mentioned that even though, as an exception, of course, even though the SSC does not ask for the reasons, the assessing officer must provide the reasons along with the issuance of the notice. So this was mentioned in one of the case laws, but normally the procedure was that we have to seek for the reasons, and such reasons have to be provided to the SSC by the assessing officer as furnishing reasons recorded along with other documents. In case any other documents have been relied upon, the same need to be provided along with the reasons recorded. And after that, once the assessing officer provides us the reasons, then we have to file the legal objections, legal or factual, whatever, all the objections at that particular time we have to file. And remember, every time I'm reading any point from here, this will be very similar to what I'm going to read even in the amended or the new provisions. So we have to file the preliminary legal objections after receiving reasons as well as other documents. We have to challenge them by filing the objections, and such objections will have to be disposed of by the assessing officer. It cannot be a case that they can simply mention it, but first issue a notice and then, first finalize the assessment, or they cannot simply leave the objections, because a number of High Court decisions are there when the objections were not dealt with, then such proceedings were quashed. Order disposing of legal objections have to be there. However, in this, a speaking order has to be issued, because such kind of aspects were not dealt with in the provisions. Provisions had limited aspects covered in them, but the Supreme Court, in fact, in GK and Drive Charge, it still holds good, has again had laid down the guidelines as to how the step-by-step procedure has to be there, as to how a notice under section 148 needs to be issued, then how we have to file a return, and how a speaking order has to be filed, disposing of every objection that the SSC raises. So these were laid down by the Honorable Supreme Court, and of course, even Ashish Agarwal has upheld this case of GK and Drive Shafts. Now, and yes, completion of reassessment proceedings as per the section 153, wherein the time limits have been mentioned in case reassessment, then whatever time period is there. And I've already covered this with respect to GK and Drive Shafts. Now, a few other important principles which have been laid down by court with respect to reassessment scheme. So, the reassessment proceedings could not be a means to carry out fishing and roving inquiries. We all know that it simply cannot be a basis of some surmise or conjecture, but it has to be based on proper reasons that have been recorded, and there has to be a live link, as we've already seen in the Supreme Court case law. So based on all this, they've also mentioned that it cannot be a simple notice just to understand as to whether any income has escaped. They need to already come to a conclusion that yes, some income has been escaped based on the material. And review or change of opinion by Kelvinator of Kelvinator India 320 ITR has mentioned very beautifully in the order that change of opinion cannot be the case of case where a reopening can take place. And definitely sanction also, a valid sanction has to be there, because there's an inbuilt check on the wanton exercise of power, on the arbitrary exercise of the power. So hence a valid sanction has to be there. And it must not be reduced to a mere formality, like simply saying a yes will not be considered as a valid sanction. They have to also give a short reason or as to how they're giving the sanction. And yes, furnishing of reasons, sanction, etc. has to be given. And that's as per our Supreme Court case law of GK and Drive Shafts and various other high courts. Now, with this, I have of course shortened it and summarized it to a very short format so that we don't spend more time on the old reassessment provisions, so that we can focus more on the current and live issues and how we are dealing with whenever the notices are coming, especially after 31st March 2023. Also, we've been receiving a lot of notices, and even our office has been extremely busy because of this. Because in a lot of cases, we are either filing a writ or we have other alternative remedies. So, be that as it may, scheme of reassessment with effect from 1/4/2021, that is after the new provisions had replaced the earlier provisions. Now, always, my seniors have told me that whenever any case comes up, first go through the section in the Income Tax Act, even though you have read it, and to understand something as to why that section has come into place, go to the memorandum explaining finance bill, and also go through the speech of the finance minister, because it will also throw some light to a certain extent on what the intention of the legislature is. So for that, but however, an interesting point I had noted in the memorandum explaining the finance bill was, in case of search initiated under section 132, or requisition under section 132A, wherein sections 153A, B, C, and D were normally deal with that. These provisions were introduced by Finance Act 2003 to replace block assessment under chapter 14B of the Act. This was done due to failure of block assessment in its objective of early resolution of such assessments. Also, the procedural issues related to block assessments were proving to be highly litigation prone. However, this experience of the procedure has been no different. Like the provisions of block assessment, these provisions have also resulted in a number of litigations. And similarly, just like in 2003, they had gotten a sea change of amendments removing the block assessments and bringing in place the provisions of 153A to 153B. Similarly, in the present case also, from 1/4/2021, they have brought in the new procedure. And one of the reasons that they mentioned is assessment or reassessment or recomputation of income escaping assessment to a large extent is information driven. In view of the above, there is a need to completely reform the system of assessment or reassessment or recomputation. Hence, the bill proposes to proposes a completely new procedure of such cases. It is expected that the new system would result in less litigation. In fact, it's the opposite, as we can see, because I see it has increased fourfold. Now, once at the time of 148A and once at the time of 148 proceedings as well. In fact, 148A, clause A, clause B, clause C, all of them we are approaching the High Court now. So, however, the memorandum still says that it is expected that new system would result in less litigation and would provide ease of doing business to taxpayers. So, with this, we understand what the intention of the memorandum is. Now, it has completely revamped the scheme of reassessment by substituting the provisions of section 147, 148, 149, and 151. And it has inserted 148A, which is the provisions that have to be followed before issuing 148 notice. Sunset clauses were inserted in sections 153A and 153C because any search conducted on or after 1/4/2021, then 153A and 153C proceedings will not be initiated. Proceedings under 148 and 148A will take care of them. And new reassessment scheme came into effect from 1/4/2021. And yes, these reassessments, the new reassessment scheme has considered all the legal precedents which were in effect till then and other relevant aspects. Now, this is the section 147, that is a new section after 1/4/2021. Here I've just highlighted what is important. That is, if any income chargeable to tax in the case of an SSC has escaped assessment for any assessment year, AO may, subject to the provisions of so and so, assess or reassess such income or recompute the loss or depreciation allowance or other allowance or deduction for such assessment year. And in explanation further, they mentioned that for the purpose of assessment or reassessment computation, under this section, the AO may assess reassess income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceedings under this section, irrespective of the fact that the provisions of section 148A have not been complied with. That is, even at a later point in time, during the proceedings under section 148, if the AO comes to if some new information comes into his possession, then if some new issue comes to his notice, then an assessment can be made on that. Section 148, issue of notice where income has escaped assessment. This is very important because before 147, we have to go through 148 notice. Now, what changes have they considered is, before making the assessment, reassessment, recomputation. In fact, I don't think I need to read this entire section. This most of you have already done it, and I will also be dealing with them in a pairwise manner in the later slides. But however, the important part, the first proviso, if we see, provided that no section, no notice under this section shall be issued unless there is information with the assessing officer, unless there is information with the assessing officer which suggests that income chargeable to tax has escaped assessment. So here again, they need to have some information, and such information should not be any information. It should suggest that there is some income chargeable to tax which has escaped assessment. But before again dwelling into this, if we see the first line of section 148, before making assessment, reassessment or recomputation under section 147 and subject to provisions of section 148. Here clearly it mentions subject to the provisions of section 148A, which means before going into the notice under section 148, the provisions of section 148A need to be considered. Yes. So prior to the issuance of notice under section 148, AO is required to follow the procedure prescribed under 148A. So directly I will deal with 148A first and then probably go to 148 and understand as to what are the issues that SSCs or other professionals are facing in this regard. The AO under section 148A is obliged to conduct requisite inquiry under section 148A clause A. Conduct requisite inquiry with the prior approval of the specified authority with respect to information which suggests that income of the SSC has escaped assessment, 148AA. Now, under section 1, and we'll also go through 148AB. Once this inquiry has been conducted, first step is conduct inquiry. This is prior to 148. Okay? Conduct inquiry. Now, the assessing officer has come to a conclusion that there is some information which suggests that income of an SSC has escaped assessment. What is the next step? Is issue a notice upon the SSC to show cause why notice under section 148 should not be issued and provide an opportunity of being heard. Time period has been mentioned, minimum of 7 days and maximum of 30 days to respond to the show cause notice, and assessing officer has the power to extend. Now here I would like to point out the 148AB is a section so as to provide an opportunity to the SSC to respond, to explain as to why a 148 notice should not be issued or why there is no income escaping assessment. With respect to this, in fact, yes. As per section 148A, an inquiry is to be conducted, and as per 148AB, must be issued providing an opportunity to the SSC as to why notice under section 148 should not be issued on the basis of information which suggests that income chargeable to tax has escaped assessment. Now it is important to understand that the information available with the AO must show that there is income escaping assessment. Once AO has come to the conclusion, then there is escapement. Now the Honorable High Court of Calcutta in Swal Limited versus Union of India has mentioned that a 148AB notice cannot be merely to conduct an inquiry. Understand this. This is very important because a lot of times what happens is a notice under section 148AB is issued, 148A is directly not issued. And whenever this notice is issued, we have to check whether it's a mere inquiry or is it based on some information which is also attached along with the 148AB notice. And whenever they don't provide us such information, the SSC can also ask for such information as to kindly provide us the verbatim language of the information that is available with you as to why there is any income escaping assessment, as to why it suggests that there is any income escaping assessment. I'll read out for the benefit of the viewers what the High Court of Calcutta has mentioned. It's in 141 taxman.com 523 dated 25 August 2022. We have held that notices dated 21/3/2022 and 33/2022 though purported to have been issued under clause B of section 148A. On a reading of the annexure, this is very important. On a reading of the annexure, it is clearly seen that the annexure does not contain any information, but it is a questionnaire. And if we actually go and visit our files, we'll see a lot of 148AB notices are in this manner or are in this format, wherein there's mere questionnaires asking that, kindly provide books, kindly provide ledger accounts, kindly provide something else. That's all they mention. They don't mention the reason as to why there is actual escapement of income, why the AO has come to the satisfaction that yes, there is escapement of income. I'll further read. It is clearly seen that the annexure does not contain information, but it is a questionnaire. If that is so, then it goes without saying that what was intended by the assessing officer is to conduct an inquiry after receiving information from the SSC, and the notice is deemed to be a notice under section 148A clause A of the Act. Thus, there is gross procedural error from the very inception of the proceedings, rendering the same as bad in law. Now, with this, if such a notice has been received in any of our cases, then definitely approaching the High Court in a writ jurisdiction may help. Because ultimately, they should have already conducted an inquiry based on which they're issuing a notice to SSC to show cause as to why notice under 148 should not be issued. It should not be a case where they're conducting an inquiry by asking the SSC to first provide books and then moving further. Now, they should consider the reply of the SSC. What does consider of the reply of the SSC mean? It is mentioned in section 148 AC. Now, consideration of reply should not be an empty formality. What does that mean? That it should not simply mean that I have responded but without considering the response, or maybe considering the response but not dealing with the objections raised therein. They can pass an order under section 148 AD. So there's a specific mention that it has to be considered whatever response has been provided by the SSC. Now, in this case, I would like to mention about the case law of Nidhi Bindal versus ITO 144 taxman.com 122, wherein it was held that it was observed that impugned order under section 148A(d) had been passed after receipt of detailed reply by SSC. Our assessing officer had not considered the reply, be it and mandate of section 148AC. Now, when I'm saying when I'm talking about consider the reply, 148AC is the clause, and there it mentions that our AO had not considered the reply of the SSC, mandate of section 148AC had been violated, and therefore impugned order issued under section 148AD and notice issued under section 148 were to be set aside. And once this is set aside, definitely in case under law the time permits them to issue another notice, they can again issue a notice. But mostly what happens is they issue these notices at the fag end of the time barring period, and hence they will not be able to issue another notice. And that is the reason why most of the people try to approach the honorable high courts under the writ jurisdiction. Now, coming back to after that, clause D mentions about decide on the basis of material available. These are the wordings of the section, and I'm not adding anything. Decide on the basis of material available on record and reply furnished by the SSC. So the act is very clear. The provision is very clear that whatever reply has been considered, based on that, the order has to be passed. It should not be an empty formality. Within 1 month of receipt of SSC's reply, whether or not it is a fit case for issuance of notice under section 148. Within 1 month, they have to pass an order with prior approval of specified authority. And mere rejection of SSC's objections, holding that the same are not acceptable, will not be treated as proper compliance with the provisions of section 148A(d). In fact, there's an interim order in this case of the Honorable Jurisdictional High Court in case of Ved Prakash Agarwal, WP number 22212 of 2022. Procedure provided in section 148 is not applicable in such cases survey or requisition initiated or made on or after 141 and the case of information obtained under 135A of the Act. Now, once these aspects have been taken care of, that is, the provisions of section, the clauses or the requisites of, or the requirements under section 148A have been taken care of by the assessing officer. Only after that, that is, a valid notice under section 148A(d) has been passed by the assessing officer, then they can go on to issue the notice under section 148. Generally, what happens is they issue the notice on the same date. Whenever the order is there, there is one line mentioned in the order itself, the order of 148A(d), that notice under section 148 is also issued, and you'll find the same date on both of them. And once the mandatory procedure set in 148 is under, you shall issue notice under section 148, along with order passed under section 148A(d), if applicable, requiring the SSC to furnish within the prescribed period its return of income for the relevant year. And definitely we must comply with that. Once a notice under section 148 is issued and the time limit within which we have to provide the return of income, if we are not planning to challenge that such 148 AD notice, it is better to immediately file the return of income and contest on the merits of the case. Now, completion of reassessment after filing of the return, the assessment proceedings thereafter shall be carried out in terms of 143.3, or in case they are not appearing, then it's 144, read with 144B of the Act, as the case may be, and the order completing the reassessment should be passed within the time limit prescribed under 153. Now, thereafter, yes. In fact, even the time limits have been revised and in a different format. Now, the time limit for issuance of notice under section 148 in terms of 149, notice under section 148 can be issued within 3 years from the end of the relevant assessment year. Now, here it seems that the regular assessment proceedings have been given an extended time period. Now, what they have done is they simply mentioned this one line: within 3 years from the end of the relevant assessment year, they can issue a notice under section 148. It seems like they have simply extended that time limit. And even for the period of 6 years, they have increased it to 10 years. That is, within 10 years from the end of the relevant assessment years. This is 149(1)(b), clause B. Within 10 years from the end of the relevant assessment year, where the AO has in his possession. Again, I have highlighted this portion because this is very important. For the first clause, they don't mention this, but however, for the second clause, they mention this, that whenever it is more than 3 years, where the AO has in his possession books of accounts, other documents, or evidence which reveal, even reveal I had to make it bold, but I could not, which reveal that income chargeable to tax, which has escaped assessment, amounts to or likely to amount to more than 50 lakhs or more. So here it's very important to know that whenever it is more than 3 years, the AO also has to have in its possession the books of accounts or other documents or evidence, which should also reveal. It's not a case that he simply has the possession of them and then these provisions can be resorted to or reassessment provisions can be initiated. They should also reveal that income has actually escaped. Which income? The income which is chargeable to tax otherwise has escaped assessment. And plus they have also kept a limit that it should amount to 50 lakhs or more for the said year and is represented in the form of an asset or an expenditure or entries in the books of accounts. Now again, a general definition or understanding should not be taken. Like, for example, if you say the asset should be represented in the form of an entry or entries in the books of account, it does not mean that simply they have my books of account, because clause B says AO has in his possession books of accounts. It has certain entries, does not automatically mean that there is escape. These probably, it may apply to some kind of bogus entries that I have entered into the book, if any, but it cannot apply to every entry made into the books of accounts. Section 149(1)(a) provides that if income escaping assessment in the form of asset or expenditure in relation to an event or occasion of 50 lakhs or more is in relation to more than one assessment year within the extended period of 10 years, the notice under section 148 can be issued for every such assessment year. Yeah. Key aspects. Now, section 149 also contains a grandfathering clause, whereby if the time limit for issuance of notice under section 148 or 148A or C has expired on 31/3/2021 in terms of pre-amendment provisions, then notice cannot be issued under the new reassessment scheme. However, subject to the maximum period available under the existing provisions, it can be issued. If we see section 149, I hope that most of us have an Income Tax Act right on their table, which really helps. At least it helps me for referring to the provisions time and again. They are quite complex. Section 149. First proviso mentions that no notice under section 148 shall be issued at any time in a case for the relevant assessment year beginning on or before 1st day of April 2021, where a notice under the erstwhile provisions could not have been issued at that time on account of being beyond the time limit specified under the provisions of clause B of subsection 1 of clause of section 153A or 153C, as the case may be, as they stood immediately before the commencement of the Finance Act 2021. Now, why I have highlighted this particular proviso is because this provision, in fact, now if we see assessment year 13-14 and 14-15 may be out of the purview of reopening, even though the new reassessment provisions say that up till 10 years you can reopen. But however, this grandfathering provision, this particular proviso, the first proviso, it clearly mentions that you cannot go beyond what time period was already available under the erstwhile provisions. The erstwhile provisions said that you cannot reopen beyond 6 years. Even under the new provisions, you cannot go beyond 6 years. So this is a beneficial provision that has come into play. In fact, on this, there are several high courts which have mentioned that whether it will be applicable to AY 13-14 and 14-15, whether they will be time barred, whether the application of TOLA will be there. Of course, that may be dealt with by my colleague, Mr. Prithvi. So I will leave that to him. And further, it mentions that in case there's an exclusion proviso also, which mentions that for the purpose of computing the period of limitation as per this section, the time or extended time allowed to the SSC as per show cause notice issued under clause B of section 148A, or the period during which the proceeding under section 148A is stayed by an order or injunction of any court shall be excluded. Again, this is the third proviso. Remember this. We had recently come across a case, and it was a very interesting case because the last period it was getting time barred as on 31/3/2023. The assessing officer has issued a notice under section 148A before 31/3/2023. Now, if we again visit the provision of section 149, the first one, section 149(1), what it starts with is no notice under section 148 shall be issued for the relevant assessment year. So, for the purpose of notice under section 148, the time limit for notice, that is section 149, comes into play. Now, this notice under section 148A came into existence. He's issued it right before a few days of 31/3/2023. And once the order was passed, the notice was issued after 31/3, that is 1/4/2023. So then the interesting question came up as to how should it be dealt with. So then we had given them the appropriate answer, but the answer of course lies in the provisions here. That is the proviso. It mentions that in case of 148AB has already been given before 31/3/2020, basically before the time limit or before the time barring date, then automatically it gets extended. That's what your third proviso to section 149(1) mentions, and that is why I had highlighted this. And thereafter, yes, so these are the important takeaways of section 149 as well. Now, if you do a small comparative analysis, I've just given it in the form of a table, if it's some help. Existence of reason to believe under the old provisions, yes, definitely. But under the new reassessment scheme, no requirement of having prescribed information, which has to also suggest that there is escapement of income. They're more or less the same, because reason to believe also had to, the reason should have been that the AO should have the reason that income is actually escaping an assessment. Even here, under the new reassessment scheme, information should suggest that income has escaped assessment. So not much of a change, I would say. It's a change of a body, but the soul remains the same. The act ultimately has to, they're trying to collect as much taxes as they can through different modes. The reassessment has to be initiated beyond 4 years in case of regular assessment concluded under section 143(3). Then only in case of the old provisions, the beyond 4 years, below 4 years, beyond 6, below 6 had come into play. And if it was beyond 4, then it was if there's a failure to disclose fully and truly material facts by the SSC. There should have been a failure on the part of the SSC, but in the new reassessment scheme, they're not looking at that. As long as they have information to show that there is some escapement, then below 3 years they can issue it, and in case it is beyond 3 years, then They should have particular information, as we already read, that they should have some particular books of accounts, and such evidence should actually reveal that there is escapement of income, and it should be either 50 lakhs or more than 50 lakhs. A lot of cases where a notice is first prima facie issued, 148A, that yes, there is escapement of income of 10 crores, yes, there is escapement of income of 20 crores, and then finally, when we ask the SSC says that no, I have not entered into such a transaction, or there's some kind of wrong information, or let's assume for a moment, yes, I have entered into a transaction, but I have disclosed all this income, or yes, I have entered into certain transactions, they all are exempt for whatever reason. Ultimately, the income, which most of the cases, maybe they do not file their returns. But once the escapement of income is below 50 lakhs, you can definitely go to the High Court and argue this, that once it is not permitted under the reassessment provisions, then they cannot go beyond that. They cannot say that just because you have some escapement, even beyond 3 years, it can be allowed. So there definitely we have to go through the merits of the case also and understand as to how the 148A proceedings, 148A proceedings were conducted, and whether proper information was given by us and how that was interpreted by the assessing officer. Inquiry and opportunity of being heard to SSC before issuance of notice under section 148. This was of course not required under old provisions, but it was indirectly done. Once you're saying that he has reason to believe, then what else has he done? Once he is recording a reason, which means that he has done his due inquiry to come to a conclusion that yes, there is escapement. And now it has simply made it mandatory. They have added one extra set of an extra step wherein we get one opportunity to explain it before even he assumes jurisdiction under section 148. That's all is the difference. Of course, my seniors may throw more light on that, but in my opinion, there is not much of a change except for additional steps which now have to be followed, additional litigation that has now come into place. Of course, litigation could not be foreseen by anyone. And in a good manner, because once your 148 proceedings under the erstwhile provisions, once the assessment was completed, then you could go in appeal, and it went on for a really long time. Now what is happening is that the budding stage itself, you are able to either stop it or you don't need to make the SSC go through such cumbersome and gruesome efforts of having a liability hanging on his or her head. Now, time limit for initiation of reassessment proceedings, we've already spoken about this: 4 years, 6 years, and 16 years. However, in the current new reassessment provisions is 3 years and 10 years. And time limit for initiation of proceedings in case of search is generally 6 years. And in the present case in the Act, it's been mentioned, it's for a period of 3 years from the end of the relevant assessment year as per deeming information. Now, there are a few conflicts regarding applicability of old reassessment provisions. Of course, all have been already decided or settled as per the High Courts or Supreme Court. So the CBDT, of course, had issued several notifications extending the applicability of old reassessment provisions from 31/3/2021 to 36/2021 as per the TOLA Act. TOLA initially, the CBDT had taken TOLA as a base and then increased the time barring. They have given a new life to the time barring cases, wherein they had said that for these extended 3 months, new notices can be issued. And Finance Act 2021 provides that the new reassessment scheme shall be effective from 1/4/2021 itself. So it does not give any relaxation there in the Act, at least, where it mentions that no, in case there's a CBDT circular, then that should be followed, that will prevail over the Finance Act. Nothing has been mentioned like that. They simply mentioned that it shall be effective from 1/4/2021. And notices under erstwhile reassessment scheme were issued to various SSCs after 1/4/2021 without following the provisions of new reassessment scheme. And as we all know, due to such overlap, that what had happened was on the last day they were issuing, in a few cases, 148 was issued on 31/3/2021. On a few cases, it has reached the SSC after 31/3/2021. That is, they have of course issued it as per the department, and as per us, we have received the real-time notification or whatever it is, we have received it after 31/3/2021, and in a few cases they have followed the CBDT circular by following, which means since they can issue a notice between 31/3/2021 to 36/2021, they've issued left, right, and center. They've issued it under the erstwhile provisions, that is under section 148 of the old provisions. Now, because of all this, a lot of high courts had different views, and finally we had approached the Honorable Supreme Court, and Supreme Court, even though the Supreme Court had mentioned that this should not be done and the department is incorrect, but as a one-time measure, they had mentioned that yes, they will still have time, and within 30 days from 4/5/2022, that is on the date of when the order of the Honorable Supreme Court had come in, they had given an opportunity to the assessing officer to treat that 148 notice as a 148 AB notice. That is, they will still have to issue a notice under 148, but they just converted that 148 notice into a genuine notice wherein they can collect further information and come to a conclusion that there is escapement of assessment. Accordingly, the time was provided, but however, here a few aspects still remain open. Something like what happens in case a 148 notice was issued before 31/3/2021, but received by the SSC after 1/4/2021. So in that case, does this Supreme Court's judgment apply to even such cases? Because Supreme Court specifically mentioned about 1/4/2021, whatever were extended by CBDT, but what about cases where it was actually initiated under the erstwhile provisions but issued later on? And one more issue that comes up is 36/2021, on the last date they have issued the notice, but we have received it at a later point in time. And yes, there are a few cases where they are issued only after 36/2021. So there we have favorable cases in the SSC's favor. So this, of course, can be dealt with my colleague, Mr. Prithvi. He can throw some light on that later on. Now, after this, and the Supreme Court had mentioned that, all the defenses which are available may be available to the SSC, including those available under the new section, under section 149, and all rights and contingents which may be available to the SSC shall continue to be available. So they did not disturb much of it, but have given an extra lease of life. They have stepped outside. They have given one opportunity to the department for this time, that yes, even though you are wrong, you're given a chance to probably rectify yourself, and so that such huge amount, around 90,000 cases were pending at that time. So they had given one lease of life, so that so much of income is not lost. Now, here I will try to deal with with a few pertinent issues which arise in the new reassessment scheme. So, is 148 the new is section 148 the new section 143? In my opinion, yes, it does hold true, at least in cases where it is below 3 years, because for the purpose of more than 3 years, they have mentioned that yes, we should have something in possession, information, evidence. It should reveal that there should be escapement. But in case of 3 years or less, so much of embargoes have not been placed. And yes, quantum related also, it has not been mentioned anything, because more than 3 years, they have kept a cap of 50 lakhs, but however, less than 3 years, they have not kept any cap. And next question that we can deal with is, and one more thing I would like to mention is now, in these cases, they mention about information. What does information mean? One of the clauses under section 148, it mentions that it can be under any information under the risk management strategy. Now, what does risk management strategy mean? What information they can receive under risk management strategy has not been defined anywhere, but CBDT circulars have time and again come enlarging the scope of it. I would use the terms enlarging the scope because it seems like some kind of an inclusive definition where every time CBDT comes up with a circular or any further clarification is given, then we have to add it to this, because ultimately once it is not delineated under the Act, we cannot restrict its understanding. So it makes it very vast to understand as to what is the information precisely they're talking about. Now, whether information as mentioned under section 148 can be referred to as any information. What does information mean? Now here, can it be considered as some sort of a wrong information? Now, when I'm saying wrong information, I had already given this example that in case your SSC receives a notice and says that yes, he's sold a property and the property is worth probably 10 crores. So then we go to the SSC comes to us and I'm like, what happened? The SSC says that yes, I have never sold any property and this information does not relate to me. So in such cases, sometimes the SSC replies, and sometimes what happens is there is no reply, and immediately they also pass the order under section 148 AD. But once there is wrong information, we can challenge that, and we can mention that since the information at all does not relate to the SSC, it should be quashed. The order under section 148A and the consequential order under section 148 can be quashed. Now here, there is a case of GDR Finance and Leasing Private Limited, Delhi High Court. In fact, Delhi High Court are also mentioned in one PCJ Securities. But in this particular case, just for the benefit of everyone to understand, I have very few slides left, so I will not take too much time, but this may be helpful for everyone. That is why I'm reading out the case laws as well. So the facts mentioned that it was alleged that the petitioner it had entered into a transaction with an entity going by the name etc. amounting to 60 lakhs in AY 1415. In response to the notice, petitioner had taken a stand that it had not entered into any transaction. That responded, held. It was held that the PAN does not concern Messrs. So and so. The petitioner stand that it had not entered into any transaction with X is correct. Given this position, in our view, both notice which is issued under section 148A and the order that was passed under 148A both suffer from obvious errors. Accordingly, the impugned order and the notice are set aside. So it cannot be based on wrong information. And here, as I mentioned in the first line, or probably in the third slide, wherein the Supreme Court had mentioned that there has to be a direct nexus, a live nexus has to be seen, it still holds true, because it cannot be wrong information. Whatever information is there, it should relate to the SSC, and for the purpose of coming to a conclusion that there is escapement of income, such information must be used. Now, another question that might come up in our minds is, should a notice under section 148 be signed, or can it be without any signature? Now here there are several high courts, of course, but the Bombay High Court 451 ITR mentions that it must be signed either manually or digitally, and if it is not signed, then it would be invalid. Even the Allahabad High Court in 448 ITR 1, an unsigned approval in electronic record said to be pushed through electronic mode at a particular point of time could not be said to be a valid satisfaction under 151. So whether it be taking approval or it be taking any serving any notice, they cannot be unsigned, and signature may be digitally done or manually done, but it has to be done. One more, this is an important question because a lot of people get confused in this, that when is the notice considered to be issued or served in case of 148, because section 148, the heading uses that the notice must be issued. In the section, it also mentions that, you know, it should be served. So we have section 282 and rule 127 of the income tax rules, which deal with service of notice under Income Tax Act. And in fact, even the high courts have time and again answered these questions in different directions. So I would like to bring to the notice of everyone one such case. It is a recent one, 449 ITR 517. The Delhi High Court in case of Sumanjit Agarwal. I'm sure most of us must already be having a copy of this. Here, what they mentioned is notices which are sent through the registered email ID of the respective GOs, though not digitally signed, are held to be valid. Here they mention even though they are not digitally signed, they're held to be valid, but in my opinion, it cannot be done so because section 282 and 127 clearly mention that the signature or the name and the address of the assessing officer must be present. Once the sections and the rules are quite clear, in my opinion, they must be signed either digitally or manually. Now, one more thing that it mentions is for uploading the notices in e-filing portal of the SSC to be considered valid service. We are still talking about valid service. The department should have issued a real-time alert as provisioned in the aforementioned section at 144B of the Act. If this is not followed, it is akin to no due dispatch of notices. This is important because what the High Court mentions is, in case an assessing officer has uploaded it on the e-filing portal, but there is no real-time alert, so it cannot be considered as issued in this case. There has to be service, but again, they have also given a safeguard for this, wherein they mention that in such cases, when it has only been uploaded and there is no notice which has been, and there is no real-time alert. Now, when I'm talking about real-time alert, it means that it's either in the form of an email or in the form of SMS. If none of them have been issued and it's only been uploaded on the portal, then what happens? That's a very important question, because can that be considered as the issuance of notice? Can that be considered as service of notice? In all the cases, whenever the real-time notice has been issued and we receive it, then the date of uploading of on the portal will be taken as issuance of notice. And once we receive the real-time alert, that is sufficient. But the Delhi High Court mentions that in case there is no real-time alert, then the date as on which the SSC actually logs into the portal of the IT portal, at that time it will be considered as service. So accordingly, it has mentioned as to it has given around 6 to 7 categories wherein what happens when the notice is issued and how it should be dealt with, when the date of issuance should be taken. So kindly note down the case law, that is 449 ITR 515 Sumanjit Agarwal versus ITO. That is Delhi High Court. Very important in our daily, and especially now, because now again there will be a lot of 148 AD orders which will be passed right now, and we need to know whether it has been issued, served. A lot of SSCs come to us saying that I have never received the notice, I have never received the order. So in such cases, if we are able to look at these aspects also, we will know whether we should take an extraordinary action by approaching the High Court under the extraordinary jurisdiction, or go with replying to the 148 notice, and how to deal with it, we will come to know. Next. Notice on non-existent person. Now, as we all know, even under the erstwhile provisions, if there's a non-existent person, of course, we have to do the due diligence of notifying the assessing officer that the SSC is no more and the legal has to have to come on record. Now, in such cases, and the same thing holds true even now, in case of Delhi High Court 147 taxman.com. If we see the ITR also, it mentions here on para 11, if you see, that's the third, that's the second para. In the present case, as admitted by the respondent, the facts are admitted. The death of the SSC was duly communicated by his legal heirs. The moment the notice was issued, remember, whenever the SSC is not there, the legal heirs should communicate the same to the assessing officer. If we sleep over our rights, then we will also lose our rights. So that needs to be kept in mind. And the ITR also duly disclosed that the same has been filed by the legal representatives. However, in ignorance of the said facts available on the record, the scrutiny proceedings are wrongly conducted in the name of the deceased SSC without bringing on record all the legal heirs as per the requirement of law. Remember this, it's not just one legal heir, or it's not just one person who has responded that the assessing officer should issue the notice upon. It should be all the legal heirs all of them have to be brought on record as per the requirements of law. This is very important and must be kept in mind. In fact, there's one more case law of the Delhi High Court in case of Savita Kapila 426 ITR 502, wherein it mentions that even if the assessing officer is not intimated by any of them that the SSC is no more, it stated that in absence of a statutory provision, a duty cannot be cast upon legal representatives to intimate factum of death of SSC to department. And thus, where assessing officer issued a notice to SSC under section 148 after his death, and in such a case, it could not have been validly served upon the SSC. Said notice being invalid was to be quashed. This is very important because a lot of times the legal representatives or the close ones of the deceased SSC fail to actually respond, and in that case, we can actually take this ground that there is no duty cast upon. But yes, in my opinion, that will be a weak ground because time and again, since even under the erstwhile provisions, it's a mandate that we, if we are aware of the proceedings that are happening, then it is better that we respond to the assessing officer and intimate that yes, the assessing officer, the SSC is no more. Now, what is information suggesting income escaping assessment? In this, the Madras High Court 450 ITR 568 has given a very interesting decision. I'll only read the relevant paras because the rest of it speak about a little facts. Not all information in possession of the officer can be construed as information. Remember, the information has been very easily used under the provisions, and they say that information as per RMS, that is risk management strategy, not defining what precise information, how can they receive it. These are not specifically defined, but however, courts will time and again help us understanding and construing these words. And Madras High Court has done this in one such judgment. Says not all information in possession of the officer can be construed as information that qualifies for initiation of proceedings for reassessment, and it is only such information that suggests escapement and which, based upon the materials in his possession, that the officer decides as fit to trigger reassessment, would qualify. The information in possession of department must prima facie satisfy the requirement of enabling a suggestion of escapement of tax. These words are important. Let me repeat this. Information in possession of the department must prima facie, on the face of it, satisfy the requirement of enabling a suggestion of escapement from tax. This is not to say that the sufficiency or adequacy of the information must be tested, as such analysis would be beyond the scope of jurisdiction of this court in writ jurisdiction. They clearly mention that you cannot challenge as to the satisfaction of the assessing officer with respect to escapement of income. But however, whether at all the information gathered could lead to a suggestion of escapement from tax can certainly be ascertained. And most importantly, the necessity for belief effaced on the statutory provisions, the dimension of subjectivity that existed pre-1st April 2021. Now, again, they're referring to the erstwhile provisions. Now, they're only saying that it's not much different from what was existing before and now what is currently in place. The AO must be able to establish proper nexus of information in his possession with probable escapement from tax. No doubt the term used is suggest. That is not to say that any information, however tenuous, would suffice in this regard, and is necessary that the information has a live and robust link with the alleged escapement. This is where settled propositions assume relevance and importance. This is the case of in writ petition number 12692 of 2022, wherein a 148D order was already passed in this. They have mentioned about the live nexus, they have mentioned about the erstwhile provisions. So it again mentions that how the earlier precedents still hold water, still hold relevance. And again, information suggesting income escapement. In Excel Commodities, Calcutta High Court, it mentions that 148 cannot be lightly resorted to so as to reopen assessment. They have also relied upon Divya Capital versus ACIT, which is 139 taxman.com 461. of course, Delhi High Court again, wherein it mentions very, in fact, Divya Capital one, it had become very famous. It had given a very detailed judgment. In fact, one of the paras mentioned this information. It says that Section 148 cannot be lightly resorted to so as to reopen assessment. This information cannot be a ground to give unbridled powers to the revenue, whether it is information to suggest under amended law or reason to believe under erstwhile law. The benchmark of escapement of income chargeable to tax still remains the primary condition to be satisfied before invoking powers under Section 147 of the Act. In addition to that, merely because the revenue respondent classifies a fact already on record as information may vest it with the powers to issue a notice of reassessment under Section 148A(b), but would certainly not vest it with the power to issue a reassessment notice under Section 148 post an order under Section 148A(d). So here again they mentioned that any information cannot be considered. It needs to establish the fact that there is some escapement of income. Whether a notice under Section 148A should precede notice under Section 148AB, I've already covered this in slide 23. That is a 148AB notice cannot be in the form of a mere questionnaire. This is what I had mentioned, and the Honorable Calcutta High Court in case of Sol Limited versus Union of India had mentioned this very important judgment. So I will skip through that. And in fact, even the Honorable High Court in Divya Capital also had mentioned that for initiating reassessment proceedings it had quashed the order passed under 148A(d) of the Act for initiating reassessment proceedings by highlighting the fact that reopening cannot be made on the basis of assumed information without conducting proper inquiries. That is, under 148AA, proper inquiries must be conducted. Now, whether an order under Section 148A(d), this also I have already covered in slide 24, which mentions that the reply, that is 148AC, the reply of an SSE must be considered. Here also it's mentioned, Nidhi Bindar, assessing officer had not considered the reply of the SSE, violation of Section 148AC had been violated. So every time there is a response, it must be considered, and only then an order may be passed. Here we have A10 Capital Private Limited, 141 taxman.com Delhi High Court, which also mentions the same, that mandate of 148AC had been violated and therefore reviewing order was to be quashed. Now let me repeat what's the benefit that everyone will have is if you get it quashed and then there is no if a next notice cannot be issued or if they are time barred, then it will come in rescue of the SSEs, and that is why at any point in time, of course, as quickly as possible, whenever you get a notice or whenever you get a order 148, immediately approaching under the writ jurisdiction is always helpful. Now, and then we have what happens if there is violation of procedure prescribed under 148A. I will wrap up in very few minutes. I have less slides left, so I will not take too much time. And I'm sure that a lot of questions which a lot of viewers have can be answered in the panel discussion, which I'm sure everyone is looking forward to. So I'll make it short and crisp. Now, violation of procedure prescribed under 148A of that, as we have seen with case laws and even otherwise, if any of the provisions as prescribed under 148A, B, C, or D has not been followed, when I'm saying 148A(d), which means considering the reply and so anything passing an appropriate order has not been followed, and proceedings must be quashed. This has also been upheld by Bombay High Court in writ petition number 10184. So and individually also we have a number of cases on this. I'm only mentioning one or two because otherwise it's information overload. Next, the show cause notice has to give a minimum of, as per Section 149 148A(b), a minimum of 7 days must be given. So it cannot be a case where only a period of 3 days has been given, and that will be violative of the provisions, and hence the same can be quashed. In a similar case in Jindal foregoings, it has been mentioned that only 3 days time was given, but the revenue had argued that even though a reply was given, I mean, even though only 3 days time was given, we have passed the order only after 7 days. So they had all the time in the meantime to actually give an additional reply or anything. But ultimately, the court held that is not acceptable, as the legislature has categorically stipulated mandatory timeline of minimum 7 days and maximum 30 days to be given to the petitioner before the order under section 148(a)(d) can be passed for reassessment proceedings. So this has to be kept in mind. Every opportunity that we are being bestowed upon under this act must be utilized well and must be kept in mind, so that either they can be challenged here or they can be utilized before the in the reassessment proceedings. Now, of course, it's not that all the high courts are in SSC's favor and left, right, and center we are getting all the best cases. A lot of cases have also mentioned that once there is an alternate remedy, then the High Court need not entertain under the writ jurisdiction, because writ jurisdiction is normally extraordinary in nature, wherein immediate relief is required by the SSC. So here in Anshu Jain 449 ITR, it has been mentioned that what is challenged before the High Court was the reopening notice under section 148(d) of the ITR. The notices have been issued after considering the objections raised by the petitioner. If the petitioner has any grievance on merits thereafter, the same has to be agitated before the AO in the reassessment proceedings. So they say that not everything needs to come up before the High Court. So a lot of times this happens that when we are trying to argue on merits and not a technical aspect, or not on a legal issue, or not a jurisdictional issue, then the High Court can always say that it need not be contested before a High Court in the under the writ jurisdiction. And one more important aspect is they cannot travel beyond the show cause notice. When I'm saying this, it means that if whatever allegation has been mentioned based on the 148(a) inquiry and 148(a)(b) allegation, that yes, based on the inquiry, I have reason to believe, later on they cannot issue a supplementary notice, or they cannot, based on a different issue, finalize the order under section 148(a)(d). 148(a)(d). The same has also been reiterated by Excel Commodities versus Union of India, which is by the Calcutta High Court, APOT of 132 of 2022. They have also had mentioned the same. In fact, they mentioned that SSC also has indirectly accepted the explanation given by the appellant or SSC that they have not indulged in fictitious derivative transactions. We say so in the order. We say so because in the order dated 7th April 2022, in paragraph 4, wherein pressing officer alleges that prima facie the appellant or SSC has taken accommodation entry by way of fund transfer from X, which is different, which is a different company. Thus, the order passed under section 148(a)(d) of that is not based on reason for which notice the earlier notice was issued under section 148(a)(d). Therefore, the order dated is illegal and has to be wholly unsustainable, because ultimately now they are attaching something else. First, they had come to a conclusion that because of a fund transfer from X. Now, after that, they said, no, now you have to also explain the sources of funds, and further they have to explain something else. So in that case, when they have finally passed the final order, the reason was different. So accordingly, the notice order was quashed. This is Excel Commodity, which I was speaking about, that is APOT 132. My last probably two aspects which I will be dealing with. Order has to be passed on material on record and not on suspicion, similar to our erstwhile. It should not be merely based on conjectures and surmises. 447 ITR 698 Abdul Majid. The Rajasthan High Court has mentioned that material available on record has to be there. So here, only on the basis what happened in this case is only on the basis that cash deposits of rupees 19,39,000 chargeable to tax have escaped assessment without anything more. The authority was not justified in jumping to the conclusion that SSC may have more bank accounts. If such an interpretation is placed on the provisions of 148A of the Act with reference to expression material available on record, which means if the material says that yes, he has 2 bank accounts, go ahead, check those 2 bank accounts, but you cannot then further say that no, you probably because you have not disclosed these 2 bank accounts, maybe you have more bank accounts, maybe you have 10 more bank accounts. So let me make an addition of probably 10 times. Each bank account has 1 crore, or each bank account has 20 lakhs. Let me make it into 10 times. So that will give unbridled powers to the assessing officer, which should not be done. So when they mention material on record, it has to be purely the material which is available with the assessing officer at the time of making or coming to such conclusion and passing such order. Now, a lack of application of judicious mind to the material record, this is very important because a lot of times whatever material is there, they simply issue a notice without actually trying to understand as to what such material is, where from such it is coming. In this case, what has happened, and this I'm telling you, I have also received, in the sense our office has dealt with 2 such cases, wherein in Naresh Balchandrao Shinde, that is 451 ITR 149, it has been mentioned, where perusal of the registered sale deed, it becomes evident that petitioner is not the purchaser of the said property, as stated in the notice under section 148AB, which means 148AB mentions that yes, he has purchased XYZ property, but the assessing officer sold or purchased certain property. Now the SSC comes up with the sale date saying he's got the copy probably from offline, which can easily be accessed. And he mentions that my name is only not there in that. So despite supplying copy of the registered sale deed to the AO, it has not been taken into consideration by him before passing the order under section 148B of the Act. The same thus clearly indicates lack of application of judicious mind to the material on record. After excluding this amount, the amount is less than 50 lakhs, therefore bad in law. In this case, of course, once they had excluded that, it was probably beyond 3 years, and hence it was bad in law. But this is also, such cases have also come up wherein it completely material does not belong to the SSC itself, and they simply based on information from wherever the risk management strategy they come to know, and then they make the addition, or at least they issue notices, and they are because they issue the notices at the fag end, they end up passing the orders. So we have to be quick in getting such information also as to on what basis they have passed the orders. We have to make our efforts and then prove it that yes, it does not belong to us, or we don't have such amount of income. So there's one more interesting question which came up before the High Courts, that whether the TOLA, the taxation and other laws, would have the effect of extending the time barring provisions beyond what was prescribed under the primary legislations. In this case, of course, there are different views of different High Courts, but several High Courts have mentioned that the TOLA Act was not a permissible device whereby the time limit could be legitimately extended for the purpose of issuing notice under 148. What am I talking about? I'm talking about the period between 15/3/2020 to 1/4/2021, wherein the period of COVID was there, and if any provision becomes time barred at that time, probably let's say 31/3/2020, then what happens? This has been dealt with by a few cases. In fact, in the case of Honorable Orissa High Court has spoken about this. And there is Honorable Gujarat High Court also, where they mentioned that TOLA cannot be the permissible device under which the time barring provisions can be extended. So they're important to know because ultimately AY 1314 and 1415 will come under this limited period, and the question whether, even though they have been issued maybe 1 year later, that is 31/3/2021, whether they will be valid or not, and I'm sure our seniors would throw a better light on that. I will probably wrap up here. Yes. my slides end here. So I hope that I have tried to cover maximum. Here I would like to now request my colleague CA Prithvi to cover a few more issues. So
Yes,
I will
yes,
open
sir.
this issue.
Right. Shashank sir, thank you very much for your nice presentation. It was chronologically arranged. First, you have explained as to what were the old provisions. Thereafter, what are the new provisions? What is the difference between the old and new, and certain issues with case laws. That was excellent hearing you, sir. Now, I may inform the participants that please hold on your queries. Your queries which have been posted in the chat box, and the new queries will be dealt at the end in the last session, wherein the senior persons on our panel will definitely enlighten you and definitely will try to resolve your queries. And also, friends, one of you was mentioning that certain case laws which have been decided by Advocate Shashank Ji were not present in the PPT. I may inform the participants that this is being telecasted live on YouTube, and it will be available on the Vijayawada branch of SIRC channel, and it can be replayed any number of times, wherein if you want a reference of the case law not quoted in the PPT, I may request you to please watch the video again, which will be available for any number of replays on the Vijayawada branch of SIRC YouTube channel. So friends, before CA Prithvi takes on, let me say a few words about him. He is an associate member of ICAI from 2019. Post-qualification, he immediately joined the chambers of Sri Manmohan Dundurji, advocate, and also established a proprietorship firm, Prithviraj and Associates, to cater the needs of both corporates and non-corporates in the area of taxation, audit, and finance. From the initial days of his career, he started appearing before various tax forums, be it ITAT, SETSAT, among others, and resolved diversified tax disputes through his convincing style of arguments. His efficiency and practicality in the area of direct tax litigations with equal weight in indirect taxes gave him ample opportunities. He is always ready to render valuable tax advices and support to startups, corporates, and non-corporates. With these few words, I hand over the proceedings to CA Prithviraj. It's over to you, sir.
Thank you, sir. Thank you very much for the brief introduction. Good evening to all the participants. First of all, I wanted to thank Vijayawada Bar for giving me this great opportunity. My friend had elaborately covered all the reassessment provisions and relevant issues. I want to add few issues or areas where there is involvement of judicial scrutiny. First issue among them is opportunity to respond to the show cause notice under section 148A(b) should be a real-time opportunity, and it cannot be a namesake opportunity, because we have received some cases in which assessing officer has served 148A(b) show cause notice after the due date for furnishing reply. In that event, assessee cannot comply with the show cause notice because due date for that was already expired. Provision says that time limit for furnishing reply should be minimum of 7 days and maximum of 30 days. But that should be as per the mandate prescribed under the Act. And if an assessing officer is serving notice, for example, if notice is issued on 15th March and that notice was served to the assessee on 18th March, then there should be 7 days time limit for furnishing reply from 18th March instead of 15th March. This aspect was covered by my learned friend in slide number 32, but I want to add one more case law, Punjab and Haryana High Court, in the case of Baljit Singh, wherein Honorable Court held that 7 days time limit for furnishing response from service data is mandatory. In that case, 4 days was the time limit available to the assessee for furnishing response. Even then, court quashed that notice because it is not as per the mandate. And with respect to the first issue, where notice was served after due date for furnishing reply, Honorable Telangana High Court has considered the issue to cognizance and granted stay in the case of Jagadish Kumar Alapati. And now the second issue which I want to speak about is the time limit specified under section 149 for reopening an assessment. There is no ambiguity, but a lot of people had doubts in this area whether 148 notice should be within the period of 149 time limits, that is 6 years, as explained by Shashank, or is it sufficient if 148 EAB show cause notice is within the time period. Now, here I would like to rope in 149 provisions, including provisos, third and fourth proviso. And I want to explain this issue with few examples. If 148 EAB show cause notice is issued before 31st March 2023, I'm taking assessment year 16-17 as an example in this case. So 6 years period of limitation ends on 31st March 2023. Now the question is whether 148 notice should be within 31st March 2023, or is it sufficient if 148 EAB show cause notice is within 31st March 2023? Now the answer to this question lies in third and fourth provisos to section 149. Here legislature has given some extended time period to department because the procedure laid down under GK and drive shafts was shifted to the pre-issuance of 148 notice. In the erstwhile regime, it was after the issuance of 148 notice. Now it was shifted earlier. So legislature thought that some extra time needs to be given to department to comply with this procedure because it requires preliminary inquiries and issuance of show cause notice, disposal of objections filed by the assessee, etc. So in this case, if 148 EAB show cause notice is issued on 25th March 2023, then also it will be treated as within the period of limitation. If 148 notice was issued immediately after the furnishing of reply. Third proviso reads, let me first read third proviso so that I can clarify this example better. Provided also that for the purpose of computing the period of limitation as per this section, the time or extended time, if any time is asked by assessee, then that time will also be covered here. Allowed to the assessee as per the show cause notice issued under clause B of section 148A. Remaining area I am leaving because it is with respect to injection of code shall be excluded. This means that the period of limitation from 25th March, which is the date of show cause notice, to the date on which a reply was called from assessee will be excluded. If the time period is excluded, then there will be still 5 days available to the assessing officer for issuing 148 notice. Still, it will be treated as notice issued before 31st March 2023. So, legislature had given one more privilege to the department. In this example, the leftover time to the assessing officer to pass 148 notice was only 5 days. Now, the legislature inserted one more proviso, which is fourth proviso, which reads as under. Provided also that where immediately after the exclusion of the period referred to in the immediately preceding proviso, the period of limitation available to the assessing officer for passing an order under clause D of section 148A is less than 7 days, such remaining period shall be extended to 7 days and the period of limitation under this subsection shall be deemed to be extended accordingly. In my example, the leftover period available to assessing officer is only 5 days. Now, because of this fourth proviso, it will be extended to 7 days. Instead of 5 days, it will be 7 days. So, the assessing officer can pass 148 EAD order and issue 148 notice from the date of reply to 7 days. If he had given 15 days time in the notice, from 25th March, it will be up to 9th of April. So from 9th of April, there will be 7 days available to the assessing officer for issuing 148 notice. Still, it will be treated as notice issued within the time limitation provided under section 149. Now, I want to add one more thing. For passing 148 EAD order, there were separate time limits provided under section 148 EAD. That is from the end of the month in which reply is passed or from the end of the month in which time or extended time expires till 30 days. But this time limitation under section 149 the period provided under section 148 lady cannot override the time limitation provided under section 149 with respect to the issuance of 148 notice. And the third issue I want to touch upon is, as we all know that COVID had made our life miserable, and it includes even department. So CBDT and central government considered that they will extend the period of limitation, and accordingly they introduced a Toll Act. By Toll Act, they extended even after amendment of provisions by Finance Act 2021. They extended time limit for issuing 148 notice under old regime up to 30th June 2021. Finance Act 2021 is applicable from 1st April 2021. So practically new provisions are also applicable from 1/4/2021. But because of this extension by Toll Act, department issued 148 notices under old regime from 1st April 2021 to 30th June 2021. A lot of writ petitions were filed before various high courts. High courts opined that notice is bad in law because it is not supported by statute. But Supreme Court gave one-time relaxation with a favorable treatment to the department. We don't know why it was given, but it was given as a one-time relaxation measure by exercising powers under Article 142 of the Constitution of India. That power was exercised because only few cases were involved in the civil appeal, whereas the cases all over India on this aspect were more than 90,000. To cover all those cases, this extraordinary power was exercised by Supreme Court, and on pan-India basis, it gave this one-time relaxation measure by specifying guidelines therein and treating 148 notice as 148 AB show cause notice, and asked the department to communicate reasons and dispose of objections. Now the question that arises here is, few notices were issued by the department after 30th June 2021. Even though those were dated 30th June 2021, they were issued to the SSE actually after 30th June 2021. Regarding issue, etc., Shashank had covered completely, means what will be treated as issuance, etc. If we go by that provisions, in few cases, email was sent to SSE after 30th June 2021. That is in the month of July, 148 notices were communicated. This aspect was not considered by Supreme Court in Union of India versus Ashish Agarwal case. And in fact, CBDT extensions will end on 30th June 2021. So these notices which were issued after 30th June 2021 will not get relief either by CBDT instructions or because of the Supreme Court decision in the case of Union of India and Ashish Agarwal case. On this issue, writ petitions were filed and courts were in favor of the SSE because limitation expires on 30th June 2021. Now, I want to go to the burning issue, that is, who should issue 148 notice? Whether it should be jurisdictional assessing officer or it should be faceless assessing officer. I want to make a presentation on this. I am sharing my screen.
Click on share screen button, sir. Appearing.
I'm doing it. Please wait for me.
That's right. That's right.
Now, to go to the main issue, that is who should issue notice under section 148 of that. I want to first basically cover the section inserted for bringing in this, for bringing a scheme. Introduction for this is faceless assessment of income escaping assessment. All the reopening provisions are already covered. So from that crux, 148 notice issue will be coming. And subsequent to the insertion of e-assessment scheme 2019, as we all are aware that from 2019 there were pertinent changes in the procedures of the department from physical or manner to they shifted to the faceless, and nowadays they are completing all the scrutiny assessments etc. on faceless. Even reassessments are being done from faceless manner. But this issue is with respect to issuance of 148 notice in faceless manner. Legislature thought fit to introduce a new scheme for faceless assessment of income escaping assessment, and accordingly section 151A was inserted in the statute book by TOLA Act 2020 to give power to the central government for making a scheme in this regard. So first of all, I would like to point out provisions of section, because as it gives power to the central government for making a scheme with respect to faceless assessment of income escaping assessment. In provision was initially inserted by TOLA Act. Subsequently, by the Finance Act 2021, there was an amendment, there was an insertion. Initial provision reads as under: the central government may make a scheme by notification in the official gazette for the purpose of assessment, reassessment, or recomputation under section 147, or issuance of notice under section 148. This is the main area which I want to cover. And this bold content was inserted by Finance Act 2021 and is effective from 1st April 2021. Or conducting of inquiries, or issuance of show cause notice, or passing of order under section 148A. Literally, all the actions of the assessing officer under section 148A were covered here to mandate that even that procedure should be conducted in faceless manner. Or sanction for issue of such notices under section 51 so as to impart greater efficiency, transparency, and accountability. So these were the major propagandas behind the introduction of faceless assessment of income escaping assessment. So first among them is eliminating the interface between the income tax authority and the assessee or any other person to the extent technically feasible. Here I would like to share my opinion. Elimination of interface between assessing officer and assessee or professional cuts in both ways. In few genuine cases, faceless assessing officer may not properly understand our explanation, and it may rope in fishing and throwing inquiries for assessing for assessees by initiation of reassessment proceedings. In alternative, in few cases, we can approach jurisdictional officers and explain their case directly to their satisfaction, so that case drops at initiation stage. So if we go by one approach, the other approach will be vitiated. So here we should take means the procedure which will be implemented by government should definitely be followed, but there are these two kind of issues that may arise because of this elimination. Second thing, for the introduction of faceless assessment of income escaping assessment is optimum utilization of resources, etc. This anyhow department will do by getting AR and CIB data without even inquiring them. By receiving data from banks, sub-register offices, and mutual funds and stock exchanges, etc. And the third one is introducing a team-based assessment, reassessment, or recomputation or issuance of notice with dynamic jurisdiction. A team-based assessment was categorically discussed under section 144B. Faceless assessment, wherein different units were prescribed. One is assessment unit, other one is the verification unit, review unit, etc. Before passing an assessment order, draft assessment order will be circulated among all the units, and only the final assessment order will be passed after giving opportunity to the assessee for furnishing objections on the variations. And this second clause is bit important here. The central government may, for the purpose of giving effect to the scheme made under subsection 1, by notification in the official gazette, direct that any of the provisions of this act shall not apply or shall apply with such exceptions, modifications, and adaptations as may be specified in the notification. But till date, there was no such notification. Further, the proviso states that provided that no direction shall be issued after 31st day of March 2022. And the third subsection states that every notification issued under subsection 1 and subsection 2 shall, as soon as may be after the notification is issued, be laid before each house of the parliament. Now the main thing here is, in exercise of the powers conferred by subsection 1 and 2, central government had introduced a scheme which is known as E-Assessment of Income Escaping Assessment Scheme 2022 by notification number 18 of 2022 dated 29th March 2022. In the scheme, it was mentioned that this scheme will come into effect from the date of publication in the official gazette. It was published in the official gazette on 29th March 2022. So from 29th March 2022, scheme is into effect, and faceless assessment of income escaping assessment should be as per the rules provided under the scheme. Scope of the scheme is as under. For the purpose of this scheme, A. Assessment, reassessment or recomputation under section 147 of the Act. B. Issuance of notice under section 148 of the Act. In this present presentation, B is most important. Scheme speaks about even issuance of notice under section 148. Shall be through automated allocation in accordance with risk management strategy formulated by board as referred to in section 148 of the Act for issuance of notice and in faceless manner. And here the automated allocation and faceless manner are very crucial words. To the extent provided in section 144B of the Act with reference to making assessment or reassessment of total income or loss of assessment. So one thing that is clear here is 148 notice should be issued in a faceless manner, that too by National Faceless Assessment Center instead of jurisdictional assessing officer. So analysis of E-Assessment of Income Escaping Assessment Scheme categorically states that 148 notice should be issued as per automated allocation in accordance with risk management strategy formulated by CBDT, that too in accordance with faceless manner to the extent possible. Automated allocation means an algorithm for randomized allocation of cases. This algorithm will be used by the department to allocate cases among the assessing officers for issuing 148 notice. By using suitable technological tools, including artificial intelligence and machine learning, with a view to optimize the use of resources. However, currently 148 notices are issued by the jurisdictional assessing officer all over India. Have verified it from other states. Even in those states, 148 notices were issued by jurisdictional assessing officers. We don't know what clarity they are holding as on today. I'll come to the representation given by Income Tax Gazetted Officers Association in subsequent slides. Even that states that there is no clarity among them who should issue 148 notices. But without having that clarity, without a support from statute, assessing officers are issuing 148 notices and initiating reassessment proceedings. And back to the slide. Instead of faceless assessing officer groping in jurisdictional issues. Next slide. Challenging the jurisdictional issue, a writ petition was filed before Honorable High Court of Telangana in the case of Messrs. Surya Lakshmi Cotton Mills Limited, challenging the 148 notice issued by jurisdictional assessing officer after the insertion of E-Assessment of Income Escaping Assessment Scheme, wherein Honorable High Court considered the plea and granted interim relief in the form of stay of the impugned notice issued under section 148 of the Act by mentioning as under. Observations of the Honorable Court. While the aforesaid scheme may not cover the order dated 30th June 2022, passed under section 148 AD of the Act, however, prima facie, the consequential notice issued under section 148 of the Act would be covered under the aforesaid scheme. This was the observation of the court after perusing section 151A and the scheme. Because in section 151A, Even though there is an amendment by Finance Act 2021, wherein 148A procedures were also involved in it, scheme is silent about that. Scheme is only with respect to the completion of assessment and issuance of 148 notice. So the procedure that needs to be carried out by assessing officer under section 148A, under section 148A completely, that is issuance of inquiry notice under section 148A small a, and issuing show cause notice under section 148A small b, and passing an order under section 148AD. Whether it should be in the physical, whether it should be dealt by jurisdictional assessing officer or faceless assessing officer, there is no clarity till date. Affirming the interim order passed in the case of Mrs. Surya Lakshmi Cotton Mills, Honorable Telangana High Court granted relief in multiple cases. This is not the only case in which Honorable Telangana High Court granted relief. There are a catino of cases wherein Honorable Court granted relief by taking observations made in the aforementioned case. In fact, Honorable Rajasthan High Court had also considered the case with the identical facts and granted interim relief by staying further proceedings pursuant to the impugned notice, since the state notice is not in compliance with the CBDT notification number dated 18 of 2022. Now here I would like to point out one thing is, notifications issued by CBDT are binding on department officers, assessing either it may be local assessing officers or it may be faceless assessing officers. It is always binding on them, and it was laid down in multiple decisions. Now the next slide, which categorically states that there is no clarity even to the department whether who should issue 148 notice. That can be clearly understood from the representation, which was recently sent by the Income Tax Gazetted Officers Association to CBDT, seeking clarification on the authority to issue the notice under section 148 of the Act after the issuance of notification dated 29/3/2022. Now here I would like to point out one thing. This notification was issued on 29th March 2022. But this Gazetted Officers Association wrote a letter to CBDT seeking clarifications on 4th January 2023. That is after the expiry of almost 9 months period. And if we take current, and there is no reply from CBDT to that representation till date. First of all, they are not having clarity with respect to what they are doing. And they seek representation from CBDT, but even CBDT is silent to give a reply to them till date. In fact, in the aforementioned representation, it was mentioned about writ petition filed in the case of Mrs. Surya Lakshmi Cotton Mills Limited, means the earlier decision of Telangana High Court, earlier interim decision of Telangana High Court, challenging the notice issued under section 148 of that, in its case by the JO after 29th March 2022. It was also mentioned by the Income Tax Gazetted Officers Association that owing to the interim order in this case, all the 148 notices issued by the JOs, that means that the notices issued from 29th March 2022 to till date, which includes the 148 notices passed as per the directions of Honorable Supreme Court in the case of Union of India and Ashish Agarwal, wherein extension was granted and time was allowed them to pass 148 order as per latest provisions. Even those 148 notices will cover under this ambit, and those are liable for the judicial scrutiny with respect to this ambit. This is the this refers to the period for which both income tax department and CBDT is silent without issuing any clarifications with respect to the decision of decision rendered by Honorable Telangana High Court with regard to the authority for issuing 148 notice post 29th March 2020. And there are certain amendments in the representation made by Income Tax Gazetted Officers Association, which highlights that they don't have any clarity, and without application of mind, they are issuing 148 notices, which reads as under: if it is presumed that actions under section 148A of the act is to be undertaken by the jurisdictional assessing officers, and the subsequent notices under section 148 of the act in suitable cases will be issued by National Faceless Assessment Center. Coordination and transmission of information between the jurisdictional and faceless wings need to be flawless. This aptly shows that scheme and section states that 148 notice should be issued by National Faceless Assessment Center. And the second thing is, if one were to hold that the JAO jurisdictional assessing officer would exercise jurisdiction under section 148A and the NFAC would issue the notices under section 148, considering the fact that he is not the assessing officer who has passed the order under section 148 AD of that, 148 AD of that, a further approval is mandated under the law. Here, I would like to share the insertions made by Finance Act 2022, because prior to Finance Act 2022, assessing officer should obtain approval both for passing an order under section 148 AD. That means wherein he categorically states that it is a fit case for reopening an assessment by issuing 148 notice. Even for passing that order, an approval should be taken. And subsequently, for issuing 148 notice, an approval should be taken from Principal Chief Commissioner is the competent authority to give authorization. From him, approval should be taken both for issuing and passing an order under section 148 AD and issuing 148 notice. Since Principal Chief Commissioner is the highest authority of the state, so for him to give two approvals, it is becoming difficult. It may be becoming difficult. So Parliament had thought to eliminate one approval by introducing a proviso under section 148. Proviso inserted under section 148 proviso inserted under 148 by Finance Act 2022 is as under. I'm reading that for the sake of easy reference and understanding. Provided further that no such approval shall be required where the assessing officer with the prior approval of the specified authority has passed an order under clause D of section 148A to the effect that it is a fit case to issue a notice under this section. Under this section is referable to section 148. This proviso states that if an approval is obtained for passing 148 AD order, then it is sufficient for issuing 148 notice. Now the moot issue here is, if 148 AD order is passed by jurisdictional assessing officer, and if 148 notice is supposed to be issued by faceless assessing officer, then the assessing officer mentioned in proviso differs. So faceless assessing officer should take approval of the competent authority once again to issue 148 notice. So because of section 151A and the scheme introduced by the government, this proviso inserted subsequently is becoming attached. And now here I would like to mention the clarification sought by the Income Tax Gazetted Officers Association from the CBDT, which clearly specifies that 148 notice should be issued by jurisdictional assessing officer and not the faceless assessing officer. Provision speaks in such manner, and this representation also states that even the understanding of department is in such manner. But despite having a proper understanding, they are carrying on the activities in a routine manner, that is issuing 148 notices in a routine manner, even though they know that they may be quashed by high courts by exercising extraordinary jurisdiction without bothering with respect to the assessments. So almost 5 clarifications were sought by Income Tax Gazetted Officers Association from CBDT. I'll go line by line, and I'll end up my presentation with the slide on these clarifications, because these clarifications were not answered yet even by the CBDT. Only there can be presumptions and assumptions with respect to these clarifications. I hope my seniors will throw light on these clarifications and and thus associates and professionals may get more clarity with respect to the burning issue, that is who should issue 148 notice. First thing is, presuming that steps required to be undertaken under section 148A of the Act to be lying with jurisdictional assessing officer. First of all, for carrying out 148A operations also, they don't have any clarity. They started with presumption. Income tax department cannot work on the basis of presumptions. It should have enough clarity before issuing any notice, because issuing a notice to small assessees or non-tax assessees will be an harassment to them, because they don't understand income tax provisions, and department is issuing notices on the basis of presumptions. And I would like to go back to the slide. Exclusion of the said actions from the ambit of faceless assessment scheme may need to be specifically clarified as required under subsection 2, read with subsection 1 of section 151A of that. First of all, the actions that needs to be taken under section 148A were not inserted under e-assessment scheme. And the second thing is, there is no clarity even among the departments whether jurisdictional assessing officers are entitled to carry on that operations. This query clearly shows that. And the second query is with respect to issuance of notice under section 148 of that may preferably be entrusted upon the JAO if the steps required under section 148A are undertaken by the JAO. Now, after the passage of 1 year from the date of notification number dated 18 of 2022, the department is seeking a new law, that too with retrospective effect. And they state that for convenience. Whose convenience, we are not able to understand. Whether the Income Tax Act is for the convenience of department officials or assessees, that needs to be answered by the seniors. I'm back to slide. As no further approval is now required to obtain for the issuance after amendment brought in section 148 of the Act. This was covered in my earlier slide, wherein the proviso inserted by Finance Act 2022 is becoming fatalized because of the section 151A and scheme of the Act. However, in that case, the notification dated number 18 of 2022, dated 29th March 2022, it is 2022, mistakenly typed as 2022, may need to be modified after amending the Act, as section 151A2 of the Act doesn't permit the government to issue any directions in this regard beyond 31st March 2022. Second subsection of 151A gives power to the central government to insert certain preconditions to the implementation of the scheme, but time limit for introduction of such terms and conditions, modifications, etc. expired on 31st March 2020. Now, if central government wants to insert any provisions with respect to e-assessment of income escaping assessment scheme, it should first modify section 151A. Then after only it can modify the rules under scheme. Third issue is, in any case, if the issuance of notice under section 148 is practically brought under the ambit of faceless assessment scheme by National Faceless Assessment Center, to avoid any further legal hassle, the same may need to be intimated in clear terms. After 1 year, they are seeking intimation from the CBDT by sleeping all these days. And the fourth one, moreover, suitable mechanism shall be put in place to enable ITBA module to issue any notice under section 148 of the Act in time, even if the order under section 148AD has to be passed at the fag end of the limitation period. Here I would like to point out one of my personal opinions. The department always feels that fag end of the limitation period has a crucial date for issuing 148 notices. It sleeps almost for, if we go as per the time limitation specified under section 149, there is a period of 6 years available with the department for issuing 148 notice from the end of the relevant assessment year. Department people will sleep for almost 5 years, 11 months, 5 years, 11 months. I'm at best giving them 1 month time because they are acting in the month of March. Department sleeps for 5 years, 11 months. I don't deny that they should get information from multiple sources, but they should speed up their process instead of burdening the assessees by issuing notices on last dates. Because of issuance of notice on last dates, few assessees were not able to collect information and furnish the same to the department for their satisfaction because of the time limitation, etc. Back to the slide. This mechanism will also need to factor in the approval flow as notice is being issued by a different assessing officer. This is with respect to the secondary approval for issuing 148 notice. And the fifth one is the very interesting thing. Instead of highly centralized approval hierarchy under section 148A of the Act, it may be contemplated to liberalize the same with CCID, if not PCID, being the highest approving authority. Now, here I would like to point out one thing. Means the person who is giving approval is not important. How carefully he is applying his mind is the most important thing. It does not alter basing upon the status of the competent authority who is issuing the notice. If department feels that CCIT can act more on it, why can't it be principal CCIT? There is no requirement for this kind of alterations. Legislature has given highest authority, the competent has made highest authority as competent authority to avoid fishing and drawing inquiries, because his experience and his knowledge will be much vast. So, and his powers will not be misutilized. Being in that highest position after principal CCIT, he will be promoted to CBDT member. So, legislature thought that his power will not be misused. So, he was made a competent authority for granting approval. Even that department want an alteration so that their activities will become easier. They are not at all worried with the assessee's version. With this, I end my presentation. Thank you.
Thank you, Prithviraj Garu. It was all the way impressive. You were qualified in the year 2019, and in a span of 4 years, you were speaking with such an authority, and also interpreting and expressing in your views on the notifications as well as the insertions that have been made in the Act. That's great. Nice to have you in this session.
Sir,
So,
with your
friends-
permission, I want to share one more opinion.
Yeah, please go on.
This opinion is with respect to challenging 148 notices. Means all these 148 notices were issued by jurisdictional assessing officer. Now we have an extraordinary remedy of going to the High Court and getting them quashed. High courts are in favor of assessees, and the majority of the high courts are in line with are in favor of the assessees on this aspect. That cannot be denied because already 2-3 high courts had given decisions. But one thing which came to my mind is, even after High Court giving a favorable order to assessees, department may in future go to the Supreme Court and make a mercy petition. It can at best be said as mercy petition. Be the head pulu ani Telugulo antaru. I don't want to use English, but I'm not getting a word to that. Be the head pulu. So Supreme Court may give one-time relaxation to the department by saying that it was the mistake of the department as a one-time relaxation. By exercising powers vested under Article 142 of the Constitution of India, this was already done in Union of India versus Ashish Agarwal case for the notices issued after 1st April 2021 to 30th June 2021. If in future, if even this 148, if a one-time relaxation was given to this 148 notices, then the whole suffrage of assessee will be again restart. First of all, it is the mistake of the department, and they are rectifying it by approaching highest court of the India and making mercy petitions. So that cannot be the practical situations in the democratic country like India. That is my last view. With that view, I'll hand over session to seniors.
Right. Thank you very much, sir. Actually, along with the 148 AD, 148 notices calling for filing of the return are being issued. Well, everyone wants to stay relevant. So each one want to be relevant in their field by exercising their power. Of course, issuing a notice under section 148 demonstrate the authority of the officer as provided by law, be it the jargon of amendments or notifications issued subsequently. So friends, before we move on to the interactive session or panel discussion, let me say a few words about Advocate Manmohan sir. Advocate Manmohan Dundu was born on 27th of May 1958 in Visakhapatnam. He did his MCom and BL from Andhra University, Voltaire, and LLM from University of Bombay. Enrolled in the Bar Council of the then combined state of Andhra Pradesh in January 1981 and joined the illustrious office of Sri M.J. Swami at Hyderabad, who specialized in tax matters. Thus had the opportunity to appear before income tax appellate tribunals, sales tax appellate tribunals, High Court of Andhra Pradesh, Economic Offences Court, etc. from 1981 to 95. Also, he was active in Committee of Andhra Pradesh Tax Bar Association, Hyderabad from 1983 onwards and was elected member, Joint Secretary, Vice President and was President of AP Tax Bar Association in the year 1995. He was selected as judicial member in the selection that took place in 1983 and joined in that capacity in 1995 at Kolkata, served as judicial member and thereafter as vice president at various branches, that is Hyderabad, Mumbai, Visakhapatnam, etc. Post superannuation in the year 2018, he restored the certificate of practice and is appearing before Hyderabad and Amravati High Courts. So friends, we have an illustrious panel including Advocate Manmohan sir, Dr. C.A. Falgun Kumar, who is the past chairman SIRC, Advocate Shashank Dundu, and my dear young fellow C.A. Prithvi Raj. So, sir, how shall we start about? Shall we first exhaust the questions which have been posed?
Before going to the question answer session,
yeah, please go on.
Summary of the flamboyant way that these people have put it, Mr. Shashank Dundu.
Yes, we'll be very much happy to hear to you, sir.
Yes. See, somehow I believe that the main intention of the legislature was to bring out simplicity in the provisions of section 148, which had gone through several phases right from before 1976 by using the word satisfied, and then in the opinion of the assessing officer, whether it's mere satisfaction is sufficient or whether it can be based on surmise and suspicion, and thereafter they wanted to bring out some uniformity by following the ratio laid down by GK and Dreyfuss's case. So they have verbatim reproduced that ratio in the latest provisions. So what we expected was that the legislature would strictly follow that. The main intention of the legislature was to bring out some uniformity and simplicity so that one should avoid litigation. Whereas here, what I noticed is that the legislature, in particular, the department was the biggest litigator in these cases, right from the inception of the new provisions that are coming into existence from 1/4/2021. As rightly put by the Supreme Court in the case of Ashish Agrawal's case. They say that there are 90,000 cases pending before various forums, various courts. So who is who has created this fuss? It's only because the department has issued notices after 1/4/2021, and Income Tax Department is the main person who understands the income tax provisions, because they're supposed to be experts in the taxation laws. And then government says, particularly the Supreme Court says, that keep it aside the principle of nemo juris non excusat, because the basic rule is that we have to follow. There is no question of equity in taxation. Equity in taxation are strangers, and you should not give much importance to the equity, and nobody should get any benefit by saying that they are not aware of the tax provisions. Whereas the Supreme Court, as a one-time measure, they assume that equity and taxation cannot be strangers. So we have to go by equity, because 90,000 SCs are going to get away. According to them, they are getting away from the provisions of taxation. They don't realize that each person has spent lakhs of rupees by going to the High Court and Supreme Court, spend lots of amount, and most of the case may be just because of this small amounts of taxation, but on principle they might have gone to the High Courts and Supreme Court, and Supreme Court says that no, we'll set aside all the matters as a one-time measure by utilizing their extraordinary power under Article 142 of the Constitution of India. And recently, in another case, with regard to vis-a-vis 153C of the Act, they say that though it's only a machinery provision, according to me it is a substantive provision, but according to them, it's a machinery provision. So the amendment that was brought in has to be applied retrospectively. So the new trend of the Supreme Court in trying to be little equitable towards the department, probably I assume that despite this new provision of 151A2 of the Act, with regard to who should issue the notice under 148 of the Act, maybe that tomorrow if they bring out an amendment, they might say that it's only a machinery provision, so it can be applied retrospectively. So with this brief prelude, because we have already eaten away much of the time of the persons who are waiting for with their questions. So let's go ahead with the question answer sessions. And Shiv Kumarji, who is an expert, because he is well known for his in-depth knowledge and deep thinking on each subject, because he dwells every issue in detail, because we regularly deal with him. So I would like to give him the first preference to answer the questions. Anything left out, I am willing to answer.
Right. Those are great words, sir. So what I understood and what CA Prithvi will also understand from your experience is that though the 148 notices are issued by the jurisdictional officers, we may get an amendment retrospectively stating that all these are valid under the eyes of the law. So
you have to go by the way that judiciary is functioning. I mean, yes. It's not a comment, but they were a little liberal because they believe that the Income Tax Department doesn't know the law, and ignorance of law is an excuse.
Ignorance of law is an excuse. Right. So on that note, I welcome.
I would like to add, ignorance of law is only excuse for the department, not to the assessor.
Not to the right. So with that note, I welcome CA Sivaram Kumar, who is a past chairman of Vijayawada branch and also a well-known person. He is very much verbose, as well as he's a poet also. So, sir, you can please unmute yourself and give your opening thoughts. Sivaram Kumar garu, you are permitted to unmute yourself. You are co-host now, and you can unmute yourself. So, in the meantime, Sir Falgun sir, in your opening remarks, you mentioned that people having crores of rupees got away by offering 2% as a tax and a mere penalty of 25,000 rupees. So in the chat box, we have a question from Shailendra, how the 2 to 3% income will be shown even though they have more than 1 crore without tax audit, as you have said in case of wine shops. Of course, you were referring to some minors, I suppose. Later on, this wine shop example also might have come. So your thoughts on that, sir?
Yes, sir. See, a person may carry on a business. The business activity has to be proved. For example, real estate people, they buy the plots, they sell the plots. While selling, he would have received through bank only the money, but he has not filed the return. So, a person who purchased the plots, or say a person who purchased acres of land, converted them with the local authority permission, laid out the plots, sold them 3 years, 4 years, 5 years, continuously has not filed the return, let us say. Now a notice has come for the past 5 years. Your bank accounts have this much, or say, we got from the sub-registrar's office, you have sold this many plots, this is the value. So a 148 notice has come. So what this person has to do is the practical question. I have carried on the business. Let him prove that he has carried on the business, because in his name, the approvals are there. Land conversion into house plots, number of schemes, projects. So for this business income, what would be the actual probable income? Probable income is not a purchase of land and sale of land. The difference is not the income. You would have incurred a lot of development expenditure. No proof. But incurring development expenditure is a mandatory thing as per the local authority before selling. So he has complied all these things, he has done the business. Then, according to you, or a general question, now let us go, come on, do the tax audit for the 5 years, which is impossible. So only prepare the mere trading account like thing, that purchase, sale, closing stock, opening stock of the land, you arrive with the due expenditure, but don't go for tax audit. Don't go for tax audit. You arrive the estimated income because you have not accumulated any assets. Ultimately, beyond the closing stock, you are not having any asset, let us say, personal assets. Then your business income is limited. So it should be estimated only in number of businesses. As I told you, whether it is a mining business, whether it is a wines business, whether it is a real estate business, ultimate, or say contractors, works contractors, a private works contractor, though not a government works contractor. For anyone, when the books of accounts are not maintained, the courts held the business income shall be estimated on a reasonable basis, on a comparative basis. That's why I say, if these notices are coming for some people who are having high turnover also, when the real books are not maintained, let us not struggle to maintain the books of accounts and then do the odd. Chartered account means immediately, come on, we'll prepare the books of accounts, come on. It's only to supportive evidence, but not a conclusive evidence, because in those years, the tax audit report is not filed. So 271B, tax audit, not doing penalty will not come. Only as per 44A, though you have not maintained the books of accounts, then there is no question of this thing. For non-maintenance of books of accounts, a penalty will be there. So I request Manmohan sir or any others to supplement and extend my answer. This is my experience. I have done this in several cases, whether it is a wine shop, whether it is a real estate business. I have experienced this. So I request sir or others to supplement these answers.
Yes, sir. Manmohan sir. Do you want to add something to this?
There is nothing much to add in this. Only thing is, if he has no other source of income, probably the Supreme Court judgment would come into play, where with regard to a Baldanashin lady, where they said if there is no other income, merely because according to the department, something can be added, that's not sufficient. They have to show that they have got source of such income. P.K. Nurjahan's case.
Right. So,
Both the feasibility of liability. So that's.
Yes. So the source that the fact that he has carried out some business should be established.
He has earned more income than what he has declared. Yes.
So should the source of income should also be established, sir, to arrive at a percentage basis?
Yes.
Yes. Right. So
I further continue. In the present scenario where the 270A under-reporting comes reporting is there, declaring the income and then availing the immunity under 270 AA is more important. Paying the tax is not the thing. The penalty avoiding is also more important. So he must arrive the correct income, declare the correct income, and there should not be any possibility for the department to arrive some other income. Thereby, what he has filed, though it is under reporting, because he paid the tax within 30 days, and then say he is not preferring the appeal, better by filing Form 68, avail the immunity granted in 270 AA, because otherwise, if something is added, if it is on estimation basis, all right. Otherwise, say, if some other income is being added, and again it becoming under report becomes 200% of the tax as penalty in addition to tax, that is more dangerous. So the business people who carried on the business can establish their income by estimation basis, which is a reasonable estimate, and thereby avoiding the penalty is more important in these 148 notices. Not only paying the tax, avoiding the penalty is also more important. That's how I thank you, sir.
Right.
Ravi
So
Kishore,
there are-
one more request.
Yes.
Let's confine to the issues concerning 148A, the new provisions, instead of general questions which they could have taken opinions from seniors like you.
Right, right. We'll do that. We'll do that, sir. Now, Sriram Kaur Garu, are you able to unmute yourself now? Please unmute, sir. Please unmute yourself.
Right now I am audible.
Yes.
You are audible, sir.
So I am very much privileged to be in the company of very senior erudite professionals like Manmohan Garu, with whom I have been associated for the last 40 years, and my guru Sri Palwan Kumar Garu, and many say enlightened senior professional colleagues, and some of them are senior and some of them are more knowledgeable than me. There are so many issues deliberated by young advocate, enthusiastic. He has been, say, carrying on an illustrious career under the stewardship of his father and guru, Dr. Sri Manmohan Garu, and say Dr. Palwan Kumar Garu is there. What I observe from the various notices, the way the law is being interpreted in favor of the government to ensure that more tax is collected wherever it is required to be collected. It's actually a very tough job for the professionals. First, we try to understand whether the notice issued under 148A(b) is within the peripheries of 149, whether the time limits and the monetary limits are followed. In case they are followed, is there any challenge to the notice itself, the virus of the notice? And then when we start replying, I understand from my own experience as well as the experiences shared by my colleagues that the fundamental questions raised for the issue of notice should be read twice, thrice, and as many times as possible, and collect the maximum data from the SSEs, and then only start replying. Whether the transaction reported is duplicated, triplicated, quadruplicated, or even say repeated more times. In one case, one same account was repeated 13 times in my notice, and I was called upon to explain why I should not be reassessed. Because if only one account is considered once, I don't have any tax liability at all. I had to say do a lot of exercise and say come out of the rigors of section 149 and 148A. So this is the fundamental requirement when we receive a notice. If it is beyond 3 to 10 years, it is nice that GK drive shaft, which the poor SSE had to run till the Supreme Court and get established a fair and equitable rule of natural justice, that the cause of reopening should be let known to the SSE before trying to reassess him once. Then it's it has become a rule of law in 148A. It's very nice. But at the same time, we should see that when the time bracket is between 3 to 10 years, it all started that when, say, acquisition of asset is the basic requirement for issue of 148A, and now from 1422, it's also enlarged as, say, asset, transaction, event, expenditure, whatever it is. So government is trying to, say, leave no stone unturned to book the SSEs, particularly those with cash transactions prior to the so-called demonetization of 8/11/2016. So now in a host of primary agricultural societies which have not filed the return, as pointed by Dr. Falgun Kumar Garu, that except the name, the department doesn't know the nature of the business or the nature of the receipt and the, say, source of bank deposit. And when a PSES deposits 10 crores and the PSES doesn't respond, the first fallout was invocation of 115BE and raising a demand of 10 crores. And then they approach the tax professional. Then, as rightly pointed out and also explained, it is highly relevant that we should establish the nature of the business before we start anything else. And after that, analysis of the information is the first and foremost primary duty of a professional before responding. We all should, say, emulate the great words of the legal legend Nani Palkiwala, that exploration of the facts of the case is the foundation for any, say, professional advice, and filing the statutory forms and taking the matter to the appellate forums. So let us delve deep into the facts. Feel, even if the SSE feels vexed with our host of questions on the facts of the case, it is our duty to bail him out only on the strength of the facts of the case. 148A is a game changer, not just for the professionals, but for every gentleman in the country who deposits, acquires, transacts in any kind of, say, money or, say, stocks, securities, assets, movables or immovables. So let us rise to the occasion. And besides the vexatious litigation generated by 148A and B, it is the bounden duty of every citizen to, say, reveal his tax transactions, keep his financial transactions very transparently, and approach the tax professionals at the earliest point of time, get his things straight, and never, say, feel embarrassed or never feel vexed by the notices flowing from the department. So I thank my colleagues for making me a part of this great exercise. And I also feel enlightened by the excellent presentation of Mr. Shashank, who is my young friend and my friend, guide and philosopher, along with his father, and my ever-loving, say, guide, friend and philosopher, Dr. Falgun Kumar Garu, and my, say, colleagues, professional colleagues, and the men at the Help of Affairs of Vijayawada branch, Netta Ravi Kishore Garu and his friends. And my, say, at the cost of repetition, I say that the notice must be analyzed. It's fundamentally the virus of the notice should be established first, and then, say, make the most of the, say, reply founded only on the facts of the case, facts of the case. File evidence with the 148, say, reply to 148B notice. And if you are, say, not happy with 148 AD order, we have, say, Manmohan Garu and Shashank to, say, knock the doors of the Honorable Court, or otherwise, so go ahead with 148 in small and medium cases. Let them not burden financially the SSEs, and then, say, face the proceedings and carry the matter to a very logical conclusion. Thank you.
Right, sir.
No, because the
next-
time constraint, I think even the question answers should not be verbose. You have to confine to the question directly and answer.
Right. We have a question with regard to trust, sir. A trust registered under Trollier not filed return for assessment year 1920 received a notice under 148 for the assessment year 1920 in April 23. If the trust files the return of income within 30 days mentioned in 148 notice, will the ITR has all the benefits of an ITR filed under section 139(1), whether section 11 benefits are available to the trust? So Falgun Garu, first you please throw some light and then we'll go on to Dr. Manmohan sir.
Sir, the answer is merely having Trollier registration is not sufficient, either in the past or now. From 1819 assessment year, filing a return within the due date given under 139(1), though the CBTD has clarified at least under 139(4) by clarification, they said that is a belated return. So either under 139(1) within the statutory due date or filing under 139(4), the extended belated return is mandatory to claim section 11 exemption. Now for 1920 assessment year, you are giving the case and now a notice is given. So though you are having a 12-day registration, so you have lost the opportunity. There is no condonation of delay. The CBTD in number of instances has given condonation of delay only for filing Form 10, filing Form 9A, or the audit report, which is mandatory under the Form 10B or 10BB. So the audit report also has to be filed in time. The accumulation notices have to be given in time. But if the delay is there, condonation power is given under 119(2)B to the commissioner exemptions. But for return filing, there is no general CBTD exemption or condonation of delay. So I am sure that the trust will be assessed as per the normal. Once section 11 exemption is not there, under the 5 heads, the income has to be computed. So for 1920, under the 5 heads, the income will be computed normal and not under section 11. This is the answer. Sir,
Can I have say one more question on the same issue? Because there is 119, section 119, which empowers the CBDT to condone the delay in filing of the return. It applies to all the SSCs across the sources of income, even if it is from other sources and earned by a trust. So one option is, say I am going to be, even if I am a trust, I have not filed the statutory forms. Yes, I can file, say them belatedly and file a condonation petition. And parallelly, can I file a petition before the humble CBDT to say that I have not filed the return? This is the genuine reason. Then they can consider and grant exemption on section 11.
Sir, for refund cases, generally, for refund cases, this delay condonation, this 119(2), they were accepting. When the exemptions are there, from 1819 assessment year, if you see, earlier you have mentioned a cooperative society. Cooperative society ATP exemption was there, whether you file the return belatedly or you have not filed the return also. But that exemption claiming is coupled with the filing the return within due date was made substantial provision.
We are not getting the voice.
Sir.
Voice is fine, sir. Voice is fine.
Sir, either for the cooperative societies up to 17, 18, even now they can claim exemption because the filing of return mandatory for ATP claiming only has come from 1819 assessment year. So similarly for trusts also from 1819 assessment year, claiming the exemption only by filing the return within 139 has come. So I don't think because you are having a Trollier registration is putting a condition. The registration is putting a condition that every year I will file the returns. Either in the past or now, filing the returns is made mandatory for the registration. That you have not considered. So this 119(2) exemption, whether it will come or not, applying as per you is right. Anybody can apply under this thing. But will they give such power for these trustees given or not is a big question. One has to try. I don't think that one should not lose hope.
Sir, say from assessment year 2017-19, onwards, all the cooperative societies claiming under Section 80P are obliged to file not within the period prescribed under 139(4) in the case of trust, but within the time prescribed under Section 139(1). Now the audit report is to be filed by 31st July and the return by 31st October. But still, as a ray of hope for those who have failed to file the return, 119(2)B, apart from claiming of refunds up to 6 years with powers granted even to commissioners and chief commissioners on the basis of the quantum of refund, let us as professionals explore the petition to CBDT and get the delay condoned so that the Section 11 exemption is not lost in genuine cases. You kindly
If this had been
deliberate on
on your
this.
bench, wherein the exemption is denied and the SSC got aggrieved, it's on your bench. So what will be your take on this, sir?
No, the simple answer to the question specifically posed is whether it can be treated as a return filed under Section 139(1), whether they are entitled. According to me, I agree with Falgun Kumar Garu. It cannot be treated as a return filed under Section 139(1), and hence he is not entitled. But at the same time, as rightly put by Shivaram Kumar Garu, one can make an attempt to go under Section 119 of the Act and approach the CBIT. Nothing wrong in approaching the CBIT, and thereafter, supposing if they don't accept, you have to file a writ petition, because on equitable considerations, sometimes if there are certain institutions which are otherwise catering to the general needs of general public, in such cases, equity plays a major role before the High Court under Article 226. So you can get a benefit. That's it.
Right.
And doesn't the court say that equity and income tax are strangers?
That's how they put it, but at the same time, always we are all human beings. The equity plays some part in the back of our mind.
Definitely.
It's applicable. Otherwise, Nirmala Cooperative Society's case is their Hyderabad bench decision. It was disposed of about 10-15 years back. I don't remember the citation, reported in ITD. Then they said the moment you are not entitled to exemption, the general commercial principles come into play. What is the expenditure incurred, that has to be directed. If there is any net income, that has to be brought to tax.
Right. One more question. In order under Section 148A(D) passed on 11th of April 2023 is valid for 16-17 assessment year. This show cause notice under 148A is issued on 31/3/2023, giving 10 days time to submit the information. On 31st March 2023, notice was given, giving 10 days time. Order was passed on 11th of April 2023 for assessment year 16-17.
According to me, the notice is invalid.
Notice is invalid, right?
Invalid.
And one question, whether once the SSC files written in response to notice under Section 148, 148A(B),
No, for 16-17, the notice was issued on 31/3/2023, isn't it?
yes,
The notice is whether it's valid or not depends on the recent judgment of the Gujarat High Court and Kolkata High Court, wherein they said, Odisha High Court, wherein they said, TOLA legislation is a secondary legislation, so that cannot take precedence over the general legislation, this main legislation. So 6 years time period, if it's over, then the notice cannot be treated as valid in law. Then, unless a notice under Section 148A(B) is given before 31/3/2023, then the notice cannot be issued after 31/3 because that's a cutoff date. So these two aspects have to be taken into consideration. Because nowadays, in most of the cases, they are issuing notice under 148A of the Act, whereas the limitation starts from a notice issued under Section 148A(B) of the Act.
right. Gogula Mahesh Garu, you are free to unmute yourself. You can unmute yourself and you can pose your query to the panelists.
Thanks for the opportunity, sir. First of all, thanks for the Vijayawada branch of ICAI for conducting such a great session. Very useful insights from Shashank sir and Prithvi sir. My question is in regard of the section 148A cash deposit, sir. As the producer rightly mentioned, it is a nightmare for the small assessees, these 148A notices. And in I have an assessee who was approached recently, sir, and he was 22 years old at the time of the cash deposit which he made in the bank, his savings account of rupees 15 lakhs. And he has done this fixed deposit. He has done this deposit in the bank for the purpose of his higher education, which he is going to pursue masters in the USA. And he has used this deposit to fund his higher education. And due to this democratization of internet, he came to know that department is issuing 148A notices who have done more than 10 lakhs cash deposit in the bank savings account. So he approached me, what is the way out? How can he prepare the suitable reply before the notice itself? So he wants the reply to be ready. So I prepared a reply. I asked what is the source of this deposit. He said that the source is personal savings and cash gifts from the relatives because he could not get a loan from the financial institution for his higher education. So he managed to arrange the cash gifts from his relatives. But my query is, sir, in lot many cases of 148A in respect of cash deposit, the assessing officer is nowhere accepting the justification of the past savings and the cash gifts from the relatives, even though there was a genuine reason for that, and how much, irrespective of how much the documentation we submit for the past savings and the cash gifts, the assessing officer will not accept such a reply, and he will reopen the assessment. So what is the way out to justify the cash deposit in the savings account in the case of the small assessee? How to prove how to satisfy the assessing officer for the genuineness of transaction?
Yes.
That has to be considered under 148 proceedings only, because under 148 AB of the Act, there is a prima facie information available, and if it's within 3 years, they are entitled to issue a notice, and it's for you to prove. Once you prove, and if there is through banking channel, if you have received some amount, probably then you can pass on the burden to the revenue. Under 156, 148AD, they have to satisfy themselves. If you have a strong case at that stage, then you can challenge 148AD notice in the High Court. Otherwise, it will be difficult.
But sir, what percentage of the gross total income of the assessee can be accepted as personal savings? As I read that there is no standard rule.
There is no standard rule because personal savings, that's the regular case of most of the cases. Like, right from 1922 Act onwards, there are circular transactions. Somebody is suing, having a sewing machine, they are earning income. So these are all the general explanations. So that cannot be the basis. So
Sir, I beg your pardon to supplement the question, sir. Some in my case also, a person has approached me. What will happen is, for these people to go for visa, they have to show some bank balance, right? These people, these visa processing agencies will somehow manage the money get deposited in the person in the student bank account. They will take all the checks. Sir, this has happened, so I am able to give it in the virtual mode, even if it is recorded.
I know this is a regular process being adopted by everybody.
Everybody, now the notices are being issued in this case, sir.
No, but unfortunately, those who are not aware of the income tax proceedings, they will take it lightly. But if at all that such case comes to us, we have always advised they're going to take the loan through the banking channel, so that that's the end of it. Then they can't even issue a notice, because most of this information goes only through CIB and AAR. So the moment it's a cash deposit, it goes through that. And even if it's about 30 lakhs, then it goes in, they make it double, because it goes through the AAR source and CIB source. Nowadays, the department is ruthless. They say total 60 lakhs, though it's actually below 50 lakhs. So if such is the case, yes, you can prove that it's beyond 3 years and then it's below 50 lakhs. So you cannot assess me at this juncture. So all that you have to prove is file the bank account statement and show that, the CIB report and AR report contains the same figures. Then you can save yourself. Otherwise, it will be difficult.
But sir,
in these type of cases is a practical issue, sir. This person, parents will be here. Parents will be pursuing the notice. The student will be at US or Canada somewhere. And even if we ask for the bank statement to substantiate the notice, sir, what is happening is the banker is not giving the bank statement stating that that person has to be present in person at the bank to issue the bank statement. Of course, these are all practical issues.
Under RTA Act, we can obtain it within 1 month. They are bound to give the reply. And second thing is, most of these people are non-filers of income tax. So even in the High Court, they don't get any sympathies. That's the problem. Most of such cases are non-filers of income tax. If it is a regular, that's the
So,
situation.
Falgun, sir, can you supplement anything on this these type of issues?
Sir, if the parents are assessees or parents are agriculturists, parents have sold the lands 1 or 2 years back and then got the money, like that, the source establishing, though there is a delay in depositing. For example, 1 year back, the parents sold the agricultural land, and then the student is now going abroad. So this cash is now deposited. So my parent sold this. My parent is not having, my father is not having any business income, or my father is not having any other income. So he sold this, and that money now I have deposited. Like that, if the source can be established, there is a good case. But without the parents having the sources, the student account only the cash is deposited. This is, as Sir Manmohan sir said, it is very difficult to fight. The source establishing is becoming more, say, after the demonetization period. For every transaction, source establishing is very important. From 2030, 23-24 onwards, the section 68 says source of source also has to be established. So the government in the past 5 years is saying, where is the source? So evidence the source. So the thrust is given by the department to establishing the source. If source is not there, go under 68, 69 and then 115B. Tomorrow that topic is going to be covered, how to assess the income after these 148 notices. Tomorrow this is at length is going to be discussed.
Right. So one more question. We will wrap up, sir, as we have run out of time. Maybe another 5 to 6 minutes with the permission of the panelists. One question is from CA Avinash. 148 AB notice, once replied by SC, they are not giving opportunity to submit any evidence. They want instead directly they issue 148 notice. FD by non-resident out of salary and outside India, they attached all proofs including pay slips of foreign company. They issued notice claiming foreign bank statement not attached source of source is not established and issued 148. This is a very simple case, unnecessary going to 147 process. So what he basically states is, whatever evidence that has been produced is not being taken care are not being considered by the assessing officer before passing an order under 148 AD. Of course, our young advocate Shashank categorically stated that clause C should be taken care. If clause C is not taken care, so Shashank Garu, can you throw some light on this question?
Sir, there are multiple judgments, I mean interim orders and judgments wherein they have clearly mentioned that it has to be considered, and considering does not merely mean that they're reproducing the reply of the SSC. It should go a little further wherein they're actively applying their mind while disposing of the objection. So there are multiple judgments in this case, Your Honor, and case, sir, and it should be, the reply has to be considered.
Right. So,
So,
friends,
Ravikishore Garu,
sir,
in
please.
all such cases where reply is not, say, adequately considered, Shashank should be in place to, say, file a writ petition and say,
Yes,
get the AO corrected. That's the only solution. I think he has not scouted for himself. I am doing it.
I very much remember in his deliberations previously that clause C should be taken care of. Clause C will come to the rescue of the SSC. So immediately Shashank struck me, the words he was saying previously. Sir, one more thing, sir. Let us say a person is having a business. He has in the erstwhile VAT law, he has a registration, a current account, some 12 lakhs turnover has been done in that. That amount was reflected in current account. But this pre-demonetization period, these people ignorantly what they have done is, whatever the unaccounted business they have carried out, let us say 1.5 crores of turnover, they have deposited in their savings bank account. The question is whether carrying out unaccounted business or not is a different aspect. But what is happening now is the deposits are not in bulk. Maybe 1,50,000 is deposited one day, 10,000, 50,000 is being paid to someone else. So like that, repetitive deposits were made. The aggregate cash deposits amounted to 1 crore. Now the assessing officer is of the view that the unassessed income is 1 crore, which should not be the case, wherein only the income is to be charged. And they are not taking this 3 years period, but they are taking the 10 years period. Now, what should be the SSC's representation in these type of cases, sir? First to Falgun sir and then Manmohan sir to supplement it.
There are several High Court decisions, Supreme Court decision, unaccounted sales, only GP has to be added, provided he proves his purchases. Similarly, unaccounted purchases, say there is the purchases are also unaccounted. Then 100% purchase is not the income. On unaccounted purchase also, the GP only has to be added. So the sales in VAT period, as you have given the example, some sales are reported under VAT or even under GST, and other sales are found in the bank. So he must establish this is also part of my business, because repeated deposit, repeated withdrawals are there. The withdrawal is also for purchase. He must prove that this is all part of business. So I purchased this is the source. So like that, if he establishes that it is a business turnover, only GP has to be added. Number of decisions, right from Supreme Court to several High Courts are there. So unaccounted sales, your case, only GP has to be added. So
Unmute yourself, sir. Please unmute yourself. Sir, Falgun garu, you are on mute. Please unmute, sir.
So under the old law GST, once you say this turnover is GST, on the turnover, the GST department sharing the information from income tax, GST is more burdensome, 10 times burdensome than the income tax. So from income tax, total turnover, you may come to GP only. So, but the GST department immediately will say, you are not purchased from the authorized sources, I'd say it is not reported. So pay the GST, pay on the turnover, the VAT. That is more dangerous. So both the things he must take into account and then reply. This is my answer.
Right. Sir, Manmohan sir, in fact, the business has been carried on.
Now, according to me, it's a moot question. It is not that easy to answer because it depends on, though they are not accounted for the purchase or not accounted for, can you prove that they were sold also? If you are able to prove that they were sold intermediately, then of course the gross profit has to be taken into consideration. And the initial period when there are purchases before the so-called sales, to that extent, it's an unexpected investment that has to be added. That cannot be avoided.
Right. No,
So
no.
if that is more than 50 lakhs, then up to 10 years, they have got the right to reopen the assessment. And
An
for
asset,
the
sir.
activities, one can go only into when 148 notice is issued, not before. Because the assessing officer need not be absolutely satisfied during the proceedings under section 148 AD. You should prima facie show that yes, there are some sales. So that can be dealt with only during the 148 proceedings.
To add one more thing, sir, there are only two key aspects in responding to the notices to 148 AB from what I find. Say many are cash deposits and acquisitions, business related transactions. Show your source and prove your source. These are the two, say, cornerstones of the reply They should be the foundations on which your entire exercise should be built. That has been canvassed in this particular session by Dr. Falgun Kumar Garu in so many words. I share this with all my professionals. So they are asking for source of deposit. If it is a PICS, I have got provision stores, fertilizer stores, deposits, sale transactions, pure agriculturists, whatever it is, show your source and prove your source in response to your 148A notice. Then, if he is not accepting, there is Shashank, there is Prithvi, there is Manmohan Garu, and after that we are all there.
So the fact is that only those who can't establish the purchase or who can't substantiate the business transaction only will come to us. We should definitely go to them. Right.
So,
To the
For
people
that,
you mentioned.
in all such cases, you are free to call me when the session ends. I have solutions.
Right.
Peak cash credit theory. Several theories are there. One of these is peak cash credit. Don't say purchase sales. Peak cash credit you offer.
That actually, in some cases, I have replied that you say that my asset is this much. If you say that my asset is 1 crore by looking at the aggregate cash deposits, the first thing is what constitutes income is the peak credit in that. So if you are going to say propose taxation, kindly limit your say focus to the peak credit and say then you listen to whatever arguments I put forth. This is the first defense I am taking with the blessings of Dr. Falgun Kumar.
But the only peak rate has to be taken.
Yes, sir.
Yeah, but with this question we will conclude, sir. CA Manikanta is asking whether 50 lakhs criteria is for amount deposited in bank account or income on such deposit in bank account. Is the question.
Income deposited in the bank account.
Income. So income criteria for 50 lakhs.
Because income on that income will not be in that year.
No, whatever threshold limit is mentioned as 50 lakhs.
No,
in
in the
the
recent
clause.
past, we have received some cases where early years deposits continued. So though these are deposits made in this year, but it will not fall under the threshold limit.
Right.
But supposing if interest is paid, that interest you must have already declared it, unless you are a non-filer. If you are a non-filer, and if including that interest and the deposit, if it's above 50 lakhs, yes, you would be attracted to the provisions of 148 AB of that.
Sir, actually, said what you have been telling is say a little enlarged after 1st April 2022, where they say that 50 lakhs limit is in respect of assets
also.
transaction, event, etc.
Yes,
But say I am in all cases I am trying to defend the SSEs by stating that yes, you have got information of an asset transaction event of 50 lakhs above, but you must have information to point out that it constitutes my income. So I am say discharging my onus and also requesting the officer to discharge his onus of generation of income from out of the amount mentioned in the notice.
But there were other subtle issues because this amendment with regard to by including the asset retrospectively during the interregnum period prior to the insertion, supposing if a notice has been issued and it was disposed of, what is the position whether the retrospective amendment can be taken into consideration? All those matters can be disposed of only by the tribunal. I don't expect the High Court to be benevolent enough to decide such matters.
When then you are there.
So with that note, I'm afraid we even crossed the time, but I appreciate the time, the enthusiasm with which all of the participants participated and the panelists who have answered the queries in a passionate manner. So thank you, Manmohan Garu, Falgun Garu, Sivaram Kumar Garu, Advocate Shashank, and CA Prithvi Raj. I thank one and all, and also I should appreciate the effort of CA M.R. Prasad from Gudivada, who coordinated all of us, and he thought that this session should be useful for those, especially from 20th to 30th of this month. Most of the returns have to be filed wherein 30 days period expires. So he was very much particular that we should put through this session. And we are very happy at on behalf of Vijayawada branch of SARCF ICA. I thank you all once again.
We thought we'll enjoy the boiling heat of Vijayawada. Luckily, we were saved out.
Yeah, that was we thought of having a physical session, sir. From 1/4/2023 onwards, head office ICA has withdrawn the this what you call virtual sessions.
Yes, yes.
So now this we are doing it as a non-CPE
Special
program.
session, but still, I could notice the passion with which people have attended. More than 130 people have attended.
Yes,
So that
yes,
shows the passion and sincere.
yes. And one of
participation.
my statement, I have encouraged some participants to log off. I stated that this will be available on YouTube for any number of replays. So they thought of utilizing this time for in their convenience, and at some point of time later they will be watching. And of course, all the Vijayawada branch YouTube channel videos will have thousands of views after it has been the live is complete. So, gentlemen, thank you very much, and we
And
hope
every participant should thank CA Netta Ravikumar Kishore and Mr. M.R. Prasad also
M.R.
for
Prasad
their
garu in
untiring
particular.
efforts. Actually, CA M.R. Prasad has literally dragged me into this when I was a little reluctant, because there is no question of participation. There are stalwarts, and I just want to be an onlooker, but he never wanted me to be a little, say, silent, and made me to unmute myself. Thank you, thank you.
I owe a lot to ICA first, and I owe a lot to you since 1982. I owe a lot to Manmohan sir since 2022. Netta always cooperates. So with his technology, he sought this permission from the institute, even if there is no CP. CP is not that important. If you just switch on unstructured learning, they will do. What is the use of it? Unless then the hot topic of giving replies within 30 days has to be judiciously done to assessees. That is my point. So at a short notice, I requested Falgun sir, saying that he is middle of the Pancha Pandava.
He is the youngest of the gathering.
I am goading you for the last 1 week for this. I have started goading him from morning 11 a.m. last 7 hours. Successfully, I got him.
Thank you, sir. Thank you.
Thank you.
that note, thank you, gentlemen. We will sign off. Good night. See you another day.